Welcome, guys. We are just getting started with today's live. Let's see what's going on, guys. Let me know if you can hear me as we get this thing going. We are just getting started here with our weekly Lunch and Learn. My name is Robert Farrington. I'm the founder of the College Investor, and we will talk about student loans, financial aid, personal finance, whatever you guys want. We are going live today here on TikTok. We also are on live on YouTube and Twitch and Twitter. So let us know, guys. You guys know the deal as we get started here. Drop your questions in the chat, and we will talk about them. Welcome, guys. If you are just joining us, I know it takes a second for this to get spread out into the world, but we are going to be chatting today. Student loans, financial aid, personal finance, investing, wherever you guys want to go, we will talk about it. And I love to answer your guys' questions. It's my favorite thing to do every week, to bring these complex personal finance topics and make them personal. Welcome, Jeffrey and TikToker, Damn Savs, Mads, welcome. If you guys are just joining us, Melanie, drop those questions in the chat and we will get started. And if you guys are over on YouTube or Twitch, say hi in the chat as well. Would love to make sure that we are answering your questions and getting any questions about student loans and financial aid answered. Welcome, Sarah and Anch and Yvonne. And Louise. Oh, it's so great to have you guys here. Drop your questions in the chat as we're getting this this weekly live Lunch and Learn started. Let me know where you guys are from. Fent is $30,000 in student loans, a lot. Honestly, Fent, it is below average. So the average college graduate today has about $38,000 in student loans when they finish school. And so having $30,000 in student loans is below average. It's actually a very manageable amount of student loan debt. So if that's all you're finishing with, congrats, that's a win, and there's pretty much no issues repaying that because most jobs and careers can easily support $30,000 in student loans. Now, of course, if you can have less, that's great, but that's doable. I hope that helps, guys. If you are just joining us, throw some hearts on the screen. Let me know if you can hear me. Fent, hopefully I answered your question. I'm glad to hear that. Great. Yes. Now you got to land a job. I mean, that is part two. You gotta land the job there. So, all right. We got some other questions here from, I am all ears. Scholarship available for a student with a parent that has passed away. I'm very sorry to hear that. There are a lot of scholarships out there. I am not the scholarship expert. With that being said, if this was recent, since you just filed the FAFSA, I would encourage you to make sure you're appealing all the financial aid, to make sure that all your offers from the schools are reflective of your new updated financial situation. If you could look if your husband or spouse passed away from the line of duty or the military. I definitely know there's scholarships available. So I'm very sorry to hear that, but there are things out there for that. It's really just having to search for it. All right, guys, we are just getting some momentum going. I love it. Please make sure you're tapping that screen, throwing some hearts down there. Let TikTok know that we are live, because we're going to go for the next 2 hours answering your questions. Lunch and Learn. Thank you so much for the hearts. It goes a long way. Win S765. I file separately from my husband. I'm on save forbearance and PSLF. So when that is a big tax question, more so than it is a student loan question. And what I mean by that is when you file your taxes separately, you do pay more in taxes. And so you have to run the numbers and see if filing separately will lower your payment, how much it lowers it, but how much is it going to increase your tax bill? And so the common example I use is if you file taxes separately, and let's say you're going to pay $2,400 more a year in taxes. So $200 a month, right? Well, and then when you go look at your student loan payment, does your student loan payment go down by at least $200 a month? If it does, then it makes sense to file your taxes married filing separately. But let's say your student loan payment only goes down by $100 a month. Well, then no, it doesn't make sense to file married filing separately because now you're actually paying more in taxes than you're saving in your student loans. With that being said, Win, I want to follow up here that you said you're in PSLF. You need to get out of the save forbearance. Like you need to apply for IBR today. You've already cost yourself a year and a half of qualifying PSLF payments. And right now, if you apply for IBR, you could use your 2024 tax return. You'll start getting those payments rocking and rolling again. There is no benefit to you waiting on the save forbearance. And even if you buy back, your buyback payment for January and February 2026 is exactly what you're supposed to be paying under IBR today. There is no savings or benefit for you remaining in the save forbearance. You're only costing yourself time, and you're potentially costing yourself more in student loan payments as a result of using future income, not past income. So please, please, please get out of save forbearance if you're in PSLF. Literally no benefit for you. Thank you for all the hearts, guys. That's awesome. Nadia, I have my loans under PSLF forgiven, but not income-based payments. Is that recommended? So, Nadia, PSLF requires 4 things. Number 1 requires direct student loans. Number 2 requires a qualifying repayment plan. So the only qualifying repayment plans are the standard 10-year repayment plan, along with the income-driven repayment plan. So IBR, ICR, pay as you earn, the SAVE was when it existed, and the repayment assistance plan when it comes out. If you are not in one of those, you're not getting qualifying public service loan forgiveness payments. So I don't know what plan you're on if it's not income-based. If you're on the standard 10-year plan, that counts, but because PSLF is 10 years and the standard plan is 10 years, you're not going to get any forgiveness because you're going to pay off the loan at the same time you would get forgiveness. So it is not recommended to do anything else except for an income-driven repayment plan and pay the lowest legal amount required so that way you maximize your public service loan forgiveness. So I hope that helps answer your questions. Philly TM, when filing my taxes, what do I do when it asks me about if I earned any taxes from tips or overtime? Your employer should designate your tips and your overtime on your W-2. If you got cash tips, there's a separate form that you're supposed to report cash tips if your employer did not report your cash tips. And then your overtime, you have to just report the half. So you get time and a half, and the no tax on overtime is a tax deduction for that extra half that you get in certain qualifying situations. Big game, welcome. Yeah, I'm trying TikTok Live Studio on the desktop here because I also wanted to stream over on YouTube as well. And so we are trying the office setup with the real. This is what we usually record our podcasts and our long format on. I am just not the most technical savvy person, so we are trying out this new setup today. Let me know what it looks like or sounds like. I don't know if it's any better or worse or about the same, but we're definitely trying something new here. Z71AY, 750 credit score, make $75,000 a year. Should I buy a $45,000 car? Hey, the cool thing with cars is it's a very personal preference, Z71AY. And the personal preference is do you want to be wealthy or do you want to have a cool car? And if I was you, I would like to be wealthy, and I would not be buying a $45,000 a year car and financing it over 36 months. I drive a 10-year-old car and I would run it into the ground, and then I would buy another 10-year-old car and run it into the ground until I was a millionaire. And then once I was a millionaire, I'd go and buy that $45,000 a year car. So it's really your call though, because it's a preference. I mean, my preference is to have money in my bank account and not have a car note. And you might have a different preference, but it really comes up to you and how you feel and what you want to do. It's a bit intimidating today. I don't know what that means. Big game. Now you're scaring me. I don't know if this setup's not working or what. Ace, lease is the way to go. Spending extra frivolous money on a car is not the way to go under any circumstances. A car is just transportation to get you to point A to point B. Your goal should be to minimize your frivolous expenses so that you can build wealth. Once you have wealth and you can do whatever you want to do, buy whatever you want to buy, lease whatever you want to lease. Hunter, so with the OT, what's it going to do for my taxes? I don't understand it. So there is a new tax deduction called the no tax on overtime. It is a tax deduction. It's not no taxes on overtime. With that being said, is you are allowed to deduct qualifying overtime, and the deduction is really the 0.5%. So overtime is time and a half. You get 1.5% of your normal pay in certain circumstances. You're allowed to deduct that 0.5 from your taxes. The end result is that it lowers your taxable income. You pay less taxes for it. So that's a win, right? Big game. What are my thoughts on the Trump accounts? Hey, I am not here to bash free money. If you can open a Trump account and you get free money, you get the $1,000 seed fund, or you work for an employer that's committed to giving money to a Trump account, get your free money. However, I don't think a Trump account is any better. I think it's actually worse for education spending than a 529 plan. And the reason is because of the way it's taxed. So it is taxed as capital gains. It's not tax free like you'd get in a 529 account. And you can't access the money before 18. And I know there's a bunch of 17-year-olds that need money to go to college. So if you're looking to save and invest for education, a 529 plan, in my opinion, still wins. And with that being said, if you're not looking to invest for your kids for education, I still think a UGMA and UTMA still win, simply because you're also taxed at long-term capital gains rates, but you have a lot more flexibility. So, there are some cool pros and cons there, or some pros to be able to roll it over into an IRA and things like that. But generally, I think get your free money with your Trump account, and there are better alternatives. I haven't really dove into every use case. Maybe you've seen some other use cases where they could be very beneficial. But right now, my kind of stance is grab your free money. But they're not the best account. Definitely for education, they might serve a purpose otherwise. Yep, the 250 Dell donation for qualifying people. Again, free money. I'm all about the free money. So get your free money. Myra Garcia, I'm paying on my student loans through my repayment plan. Will they take my tax refund? I'm guessing you meant tax refund. Looks like you got cut off there. So Myra, they are not taking tax refunds this year. They are not garnishing those refunds, which is a win. And if you're in repayment on your student loans, they're also not garnishing your wages or your tax refund. They only take your tax refund if you're in default. Default, Myra, means that you have not made your full student loan payment in 9 months. So if you're making your full monthly payment on your student loans, you're not in default, and you don't need to worry about anyone garnishing your tax refund or garnishing your wages. Jay, can I deduct the 0.5 from double time? No. So it's only for eligible time and a half by state and federal or for federal law. You getting double time is a different benefit and it's not something that's deductible. April, is it possible to refinance personal student loans to get a better interest rate? So, student loan refinancing is a thing, April. However, if you have federal student loans, it's almost never ever recommended that you refinance because when you refinance a federal student loan, the only refinance options are private student loans. So you are now replacing your federal loan with these new private loans, and you lose benefits, income driven repayment plans, loan forgiveness options, hardship options. If you did this before the pandemic, you didn't get your loans paused. There's a lot of benefits that are positive for having federal student loans. And generally, interest rates on your student loans, especially federal ones, don't matter. They are the tiniest amount of money you repay. If you repay your student loan in 10 years, it's less than 20% of your total amount you repay is interest because student loan interest is always simple interest. It's not compound interest. So don't necessarily worry about the rate. But if you have private loans, that's the only thing you're shopping on. So if you can save on your interest rate with private loans, well, yeah, go check it out and go save it and go see if you can get a better deal on your private student loan interest rate. I recommend checking it once a year, especially right now because interest rates have been dropping. But don't refinance your federal student loans. Lime Lean. I have a 403B in an old employer account trying to decide if I should put it with my current employer. I'm a big believer, Lime Lean, in just rolling it over into an IRA. You should just go to your favorite brokerage of choice, Fidelity, Charles Schwab, Vanguard, Robinhood, roll it into that. Definitely don't leave it at your old employer. And I wouldn't put it with your new employer either. I would like to have control of my money. I don't want my employer to have control and be forced with whatever their options are. I don't know if they're good or bad, but it's not your choice. And if you go to a Fidelity, Schwab, Vanguard, wherever, it can be your choice and you get to make those decisions. Guy called Austin, take on student loan tutor. I am not familiar with the student loan tutor. I know a lot of people in this space, and they're ones that I really haven't come across over the years. And I only recommend people that I know and trust and have been doing this for a decade plus and are experts in their field. Not to say that they're good or bad, I just don't know them. If you are looking for help with your student loans and you need some help on the law side of things, I recommend my friend Jay. You probably see him, Jay, the student loan lawyer. Known him for 15 plus years. That's what he does, is law and student loans. If you need help on the financial planning side of things, because maybe you're a doctor, high net worth individual, business owner, and you want to pull those levers, I recommend the team at the Student Loan Planner, Travis and Megan, also known them for well over a decade, and they are doing right. They are certified financial planners, fee-based financial planners, which is awesome. Most other people don't need to pay for student loan support because the options are very standardized. Everything's publicly available online. There's less options than you think. It's really more about coming over your own psychological hurdles of having to choose a plan than it is to navigate your options because your options are very straightforward. Alliance, best way to save money? That is a great question. It really comes down to just building out a delta between your income and your expenses. So I'm a big believer on the earn more side of things. And what I mean by that, Alliance, is that it's just math. You have your income minus expenses equals what you can save, right? So you can grow your income, you can cut your expenses, and you build out a buffer that you're able to save. So at some point in time, though, you can't cut everything. You got to live somewhere, you got to drive, you got to get to work, got to feed yourself, got to pay for insurance, whatever it is. You can't minimize all the cost. You can definitely shop and compare, cut out frivolous expenses, not have 7 streaming subscriptions, whatever. You can do those things, of course. but it's only going to get you so far. The other side of the things is, how do you earn more money? Go out and work, get a second job, get a better job, negotiate a pay raise, side hustle, go drive for Uber, DoorDash, whatever. And a lot of people really like poo poo on the fact that you can only make $100 a week or something driving for DoorDash or whatever it is. But that's $100 you didn't have before. And you do that again week after week after week. And then all of a sudden that turns into $2,000, $3,000. And then you're saving and investing that, and it's growing for you. And then in 5 to 10 years, it's a nice nest egg. And you've really improved your financial situation significantly for those uncomfortable choices that you made that people like kind of judged you on. So a big thing that you have to overcome is the judgment of other people in the choices that you make, because the fact is that most Americans are very bad with money. And so if you are relying on the people that are bad with money to judge your choices to be better with money, you're just going to stay in a bad cycle. My coworkers messed up. That's how they're getting 15K back. Oh, Jay, I feel bad for them, but I also I get it. It's very confusing navigating the no tax on tips, no tax on overtime stuff. Anthony, how long can they make you pay for? I have been deferring it on and off for years. So Anthony, I'm assuming you mean how long can they make you pay your student loans for? And Anthony, the repayment plans are based on when you took out your student loans. So the income-based repayment plan is 25 years if you took out your first loan before 2014. It's 20 years if you took out your loan after 2014. The new repayment assistance plan is 30 years. But here's the thing, Anthony. The end goal is you have to either pay that off or you have to be in repayment for that period of time. And so you deferring it and forbearing it, maybe you're in the save forbearance right now, I don't know. That doesn't count for the timeline. And so you might be getting yourself in a much worse situation as a result of that strategy than just getting on IBR and getting it done. Whether that done is time done or done is that it pays off your loan. Sandra, how can we talk privately? I'm at a total loss. Hey, I would love to do one-on-one coaching and consulting, but I don't do that any longer. The College Investor is a news and media organization. I'm just here to help educate you. If you want professional help for your student loans, as I said, the law side, go talk to Jay, the student loan lawyer. Go talk, if you want financial help, it's the student loan planner team. Those are the best paid options, in my opinion, on where to go. With that being said, if you only have federal loans, you don't really have options. Like right now, Sandra, you have IBR. If you're in the save forbearance, enroll in IBR. That's it. Come July 1st, you could also look at the WRAP plan. And the only option is go to the calculators and see which one gives you the lowest monthly repayment amount. So those are your options when it comes to your student loans. And that's where it's like, I think a lot of people are overwhelmed, but at the same time, you don't have choices. You have like two options here. Mr. Pickles, how do I pay off $22,000 in debt while attending school and paying tuition out of pocket? Well, Mr. Pickles, when you're in school at least half time, you don't need to pay that debt. What I would recommend personally is keep doing what you're doing to pay out of pocket and minimize the debt. Get done with school, use your grace period to get your job. And then once you get your job that you're going to school for, then you work on paying off that debt. A lot of people get really stressed out about like the loan balance growing and stuff, but like here's a great thing to think about. If you are an undergrad, if you are 18, 19, 20, 21, or 22, whatever it happens to be, and you're paying for the 4 years of undergrad, your undergraduate federal student loans will only accrue $1,500 in interest over those 4 years. The interest is not going to hurt you in the overall big financial scheme of things. It's deferring, forbearing, ignoring, going into default, going to graduate school that doesn't pay off. Those are the things that really hurt you financially. $22,000 in debt, put them into deferment, Mr. Pickles. Get done with school. then get a great job and start paying them back at that point in time. Che, is there a way to lower your property taxes? It really depends on your state. I know I have some friends over in Texas and a few other states where they keep raising them, and there is a massive like appeals industry where you can appeal your property taxes. And so if that's you, go appeal your property taxes. There's also a couple companies that I know do this, Abode Money, Ownwell. They can help appeal it, but then they take a percentage of what they save you. So just be mindful. But yeah, there is ways to do it. Marie played 2 years of tennis at junior college. It was boring but free. I love junior college. I love community college. It's free in like 30 states. At the end of the day, my videos, you guys see them. Employers don't care where you got your degree. They don't care where you went to school. Just get your education for as cheap as you can. And then room and board, living in the dorms, that's not education. Like you're not like you're basically borrowing money to like go on a vacation, and like you shouldn't do that for your financial future. Damn, not Kai. Great name. How common is it for people to take out 100K in loans for just undergrad? It's actually very rare. Less than 10% of families take out over $100,000 in student loans or just actually pay $100,000 for undergrad. With that being said, damn not Kai, you as an undergraduate student can't even do it. So if you are a freshman, you can borrow $5,500. It goes up to $6,500 as a sophomore, and then it's $7,500 to finish, right? So like the most you can borrow as a undergraduate is $27,000. There's actually, you can get another year in there, but you can't do it yourself. So then after you exhaust your federal borrowing as an undergraduate student, you either have to take out Parent Plus loans, which are your parents' loans, or you have to co-sign private student loans, which require you and the parent to do it. And it just, a lot of people don't do it. Yeah, some people do, but it's very, very rare. Pretty much everyone you see with over $100,000 of student loan debt, it's from graduate school. It's not from undergrad. And then on the flip side, damn not Kai, yeah, so your parents want to take out the Parent Plus loans just for me to go there. Well, that's their loans, but like you need to have a conversation with them. And we have a cool calculator at the College Investor called the How Much Student Loan Debt Can I Afford calculator, where you could put all your loans in. You could put your loans in, you could put Parent Plus loans in, you could put private loans in, and you can see what the repayment is after graduation. But the thing is, damn not Kai, there's not a lot of jobs too when you graduate college that when you're 22 years old will help you pay back that level of debt. Like it is just not that normal. Most kids graduate college and they start earning $40,000 to $60,000 a year. Maybe if you're going into engineering, you'll get 70 or 80, but it's not that normal and it's not that easy to start repaying that level of student loan debt. So, if they don't want to wager their retirement funds, I don't think it's safe either. Remember, damn not Kai, too, there's also things to think about here. Whatchamacallit, Marie just said junior college, and then you transfer. One of the interesting things is it's very easy to transfer to an Ivy League school as a sophomore or a junior than it is to try to get in as a freshman. Like you can go to undergrad or go do your first year at junior college, you could transfer. Part two is how do you minimize your time in college? Do you have a bunch of dual enrollment credits, CLEP exam, AP? Can you go to college for 3 years and be done, right? Can you live at home and go to college? Because room and board is typically more expensive than even tuition at pretty much every school, except for like the 20 or 30, like most expensive private schools. Room and board's the bigger problem here. So can you live at home? So all things to think about as you navigate those things. BK, not sure where to start. I got my AA in Florida, and now I'm in Illinois. What do I have to start over? Don't really know what you're going for there, BK. Gianna, I got PSLF for nursing, PSLF for $9,000 for master's. Congratulations. That is a life-changing event. That's a great thing. And see, people, it does happen. About 150,000 people a year are getting public service loan forgiveness. All right, guys, we've been going for 30 minutes here. I'm going to keep answering your questions for today's Lunch and Learn. I love seeing the engagement that we're getting on this live today. So if you haven't, drop your question in the chat and we will talk about it. If you're joining us, we're also live on YouTube and Twitch, and I think we're on live on X and maybe even LinkedIn. So guys, if you're on other platforms, please say hi in the chat. I will see your message, drop your question there, and we will gladly talk about it. T Shooter, I had to take out private loans for my sophomore year, 20K for the year. That's not worth it, T Shooter. You're not going to get a job that's going to help you pay those back. I would be very mindful of it. I was 80K in debt when I graduated. I'm debt free, but I have more invested in my parents after 20 years. Oh, so this is historical. Yeah, you don't want to do that today because that's not going to work out. But history is a little different. Curly Q, 529 or UGMA. My husband and I opened a 529 for my nephew because their parents said they want him to go to college. With that being said, 529 is the best education savings account, and there's a lot of benefits to it tax-wise. You get a tax deduction for contributing. Since you are the aunt or uncle, it won't impact that child's financial aid, the FAFSA, when they go because it's not reported. So there's a lot of benefits to a 529. The con is, right, if they don't go to college, you're going to have to decide other options. Do you just keep the money there and transfer it to another kid? Do you use it in other ways? Maybe you roll it to an IRA. Maybe you just pay the penalty. Who knows? So that's the downside. The UGMA has pros and cons though too. So the UGMA automatically becomes that kid's money at 18 or 21, depending on the state. Part two is it will negatively impact the financial aid. But the benefit is it can be used for anything, anytime, anywhere. Like there's no restrictions on it. So if you are looking to save for education, the 529 plan is the best way to rock and roll. The UGMA is much more flexible. It's just like a taxable brokerage account, but it's a taxable brokerage account that becomes that child's taxable brokerage account. I don't know how you feel about that. Tyler, do you recommend standard repayment or another plan with a lower monthly payment and invest the difference? Tyler, it really comes down to what your goal is with your student loans. If you are one of the 50% of student loan borrowers that are eligible for any type of student loan forgiveness, then your job is to pay the lowest legal amount required by law and maximize your loan forgiveness. If you are one of the 50% of borrowers that does not qualify and is not getting any type of student loan forgiveness, then just snowball and pay off those student loans. There's really, yeah, you can like pay less and invest the difference, but most people's student loans are in the 5, 6, 7, 8% range. You're not going to get that big of a difference in investing net of fees and taxes. We're talking like a 1% difference, whereas the financial freedom of having those student loans pay off are going to be so much bigger for your life than like the minor delta that we're talking about when it comes to your investment gains. Damn not Kai, thanks for sharing all those. Yeah, you commit to USC. It's a great school, but is it worth the debt that you might get yourself into? Like, I don't know what your goals are and what your degrees are and how much you're leveraging what they have to offer. T Shooter, I'm really confused by what you mean that financial freedom is a myth. You would rather have the debt than 500K in the bank? I've been doing this a long time. Oh, gotcha. Now, Now I see your quite. I feel like you needed to have the versus $0 a little sooner, T shooter. I was like, I've never known anyone that wants to be 500,000 in debt with nothing. I gotcha. That's awesome. Okay. I can see that. If you're moving in a positive direction, it definitely can be value add. I think the hard part is, though, T shooter, is that financial freedom itself is not the myth. What's the people get themselves into trouble is most people aren't putting 500K in investments. They are racking up the debt, and then as their income grows, their lifestyle continues to inflate, and they aren't doing that other side of things, right? So they're trapped in that debt cycle, and they aren't building that wealth. So and that's a fair thing, Damn Not Kai. So Damn Not Kai says the debt is not worth it. The anxiety isn't either, and I don't learn well in that environment. I completely sympathize on that one. All right, guys. DC, I am getting forgiveness this month. I am worried about the tax bomb next year. Well, TC, first off, congrats. It is always better to have your student loans forgiven than not have your student loans forgiven. You don't mention how you're getting your student loans forgiven. So, if you are getting them forgiven due to an income driven repayment plan, yeah, you will have a tax bomb potentially. And we have a tax bomb calculator on the College Investor, and you can click that link and you can find that one. But a lot of people actually overestimate the tax bomb. So I would encourage you to go run the tax bomb calculator and see what your potential tax bomb could be, and then you just save for it. You can also set up payment plans with the IRS, things like that. But a lot of people surprisingly don't have a tax bomb because they're insolvent, things like that. With that being said, if you are getting other types of student loan forgiveness, for example, public service loan forgiveness, borrower defense to repayment, those are not taxable. They are always tax free federally. So you should be fine on that front. Um, wouldn't be a tax bomb. You can only write off $2,500 in interest on your taxes. T Shooter, when we're talking about the tax bomb, when you get your student loans forgiven under certain repayment plans, the canceled debt, you get a 1099-C, and the canceled debt is added to your income as ordinary income. And so when we're talking about the tax bomb for student loan forgiveness, that is what the tax bomb is. The canceled debt gets added to your ordinary income, which of course increases your income, and it becomes taxable. Certain types of student loan forgiveness are tax-free by law. Certain types are taxable by law. So you have to navigate that one. A lot of people, like I said, though, they over-index this tax bomb because, moving from, say, $60,000 a year to, $100,000 per year, it sucks. But, you got $40,000 in student loans forgiven and you might owe $6,000 more in taxes. Like, you're still better off with the debt forgiveness than you are without it. And then a lot of people end up being insolvent. So they actually owe nothing and they just are afraid. Mel, can a 20-year-old that earns $400 a month apply for FAFSA on their own? Mel, there are very specific dependency rules for whether you're considered a dependent or independent student. Just because you earn money and you file your own tax return doesn't necessarily make you a independent student for FAFSA. The dependency rules are very straight. If you're under 24, you're pretty much always a dependent unless you're married, you have your own kid, you're in the military, and there's like a few other rules that make you an independent student. But if none of those kind of exceptions apply, if you're 20 years old, you are still considered a dependent student for federal financial aid programs. right, guys. Welcome, guys. If you are just joining us, we are doing our weekly lunch and learn. We've been doing this now almost every week this year. And so I love being here and answering your questions about student loans, financial aid, personal finance, investing, wherever you guys want to go. I love it. If you are just joining us, or if you've been here for a little bit, tap that screen, put some hearts down. The hearts go a long way to tell the TikTok algorithm that we are actually live and there's real things going on here and people should come and check this out. And it doesn't cost you a thing. It's just liking it. And if you do have a question, drop it in the chat and we will keep working through these questions here for like the next hour and a half or so. I know we're probably past lunchtime on the East Coast, but we're probably coming up on lunchtime here on the West Coast. So drop it in the chat and we will continue our fun lunch and learn Q&A session today. Teddy, I just maxed my Roth for the year. Congrats. Do I have any suggestion? Are you looking for suggestions on what's next, or are you looking for suggestions in other ways? Oh, I don't know. Yeah, another question or another thing there, but let me know. I mean, you probably have seen our order of operations for what to do with that cash. Well, just put it in a low-cost total stock market fund and just rock and roll. There's nothing fancy to do. Investing is supposed to be like exciting and fancy. Like it's supposed to be boring. And the goal is, how do you get more money into your investments and watch them grow over time? So Ebony, thank you for sharing your estimated tax bomb. I wonder if that's from our tax bomb calculator is $14,000. You know, that is better than $65,000. So one, you need to look at the positives. You're saving $41,000. Number two is now you know what you need to plan for. So you can start saving, you can start getting that all prepared. You could find a tax professional that could help you with your return, because remember that also you have your standard deduction. You might be able to itemize deductions. You might have tax credits. That could also go down. And then number three is a tax professional can help you set up a payment plan with the IRS if you need it. So this is why you run the numbers, though, because you can't make a plan if you don't know what you're even planning for. Fancy pants. Each year your interest gets compounded and the next year it grows more interest, higher interest rates. Don't know what you're talking about, but that is how interest works. No, I don't know, Nintendo? I don't know, no entiendo? I don't know. My fiance has federal student loans. Could my income be garnished once we are married? Well, remember, first off, all garnishments and offsets are paused currently. Number two is your fiance will only see her wages garnished or tax refund taken if she's in default on her student loans, which I hope you're not marrying someone that is in default on their student loans, because that means that they're making bad choices, because it's always financially worse to be in default on their student loans than it is to be in a repayment plan. So if you're in a repayment plan, you're not going to see anything. And then number three is if you do get married, they won't take your wages. They can garnish hers. However, if you file your tax return jointly, they can garnish your entire refund, and you could do special forms called injured spouse relief to get your portion of said refund back, but it's a real pain in the butt. So going back to the basics, get out of default if she's in default. Like, there is no good financial reason to be in default, and you're likely costing yourself way more money than you ever would be facing if you were just in repayment on your student loans. Teddy, yeah, that's an example of one, and just keep it simple, man. Like, that's it. Thomas, for those with disability discharge, they never get a 1099-C. Correct. Disability discharge is always tax-free federally, and I think it's tax-free in every state. I don't know of a state that charges taxes on disability discharge. So that was actually just codified into law by in the One Big Beautiful Bill. It's crazy that that wasn't actually a permanent rule until now. Cheapest way to get through medical school. Yeah, great name. Yeah. It really starts with your undergrad. There's not really an easy way to get through medical school itself, but you can minimize your debt going into it. Uh, I don't really know of any hacks to make medical school cheaper. I do know of hacks to help you pay off the student loans you take. So focus on taking your federal student loans. Make sure you apply for public service loan forgiveness when you're in residency, and then work in public service for another 4 or 5 years, and then you get all of it forgiven. So you don't really need to worry about it. But that really becomes, there's so many nuances there. Where you're at, are you an undergrad? What are you trying to focus on? So, yeah. Thalia, can you explain garnished wages for federal student loans? Sure, Thalia. First off, though, I want to start this conversation with the government has paused collection activities on student loans again. So they won't be garnishing your wages and they won't be taking your tax refunds. With that being said, they always will again, and they used to in the past, and they will do it again in the future. If you go into default on your student loans. So default means that you don't make your required student loan payments in full for 9 months. They will start collections, and collections on student loans are wage garnishment, tax refund offsets, benefit offsets, things like that. And you might think there's like a person doing this, but no, your social security number just gets sent over to the Treasury Department, gets put in all these databases, and they will just, anytime you're getting paid, they will find it and they will start garnishing it. Here's the thing though, is that they're going to garnish 15% of your wages. And that might sound like not very much and you're just making progress on your student loans, but no, because they are adding 20% in collection costs to your student loans as a result of you being in default. And you have to realize that 15% is more than IBR for most borrowers of 10%. This could be your monthly payment. It's likely more than what your payment would be under the repayment assistance plan of RAP. And even if you had really old loans, IBR is 15% for loans before 2014. So it's the same, but without those 20% collection costs added to your loan balance. So this is why you are always, always, always financially worse being in default than you are in repayment. So hope that helps. Chris, current financial aid professional waiting out the safe plan forbearance. I am not a fan of that, Chris. I am not a fan of that. And let me tell you why. I'm venturing because you're a financial aid professional that you are working for a college, which also means that you qualify for public service loan forgiveness. There is zero benefit for you being in the safe forbearance if you qualify for public service loan forgiveness. And here is why. If you were thinking, oh, I'm going to buy back this time, well, you know what your monthly buyback payment's going to be? It's whatever you're supposed to be paying right now under IBR. There is no savings for you being in safe forbearance. But here's the kicker. If you got onto IBR today, you could apply for IBR using your 2024 tax return, which my guess, maybe I'm wrong, my guess is your 2024 income was less than your 2025 income. And given that you're going for public service loan forgiveness, we know you have a set 120 payments you got to achieve, and maybe you've already done 60 of them and you got like 60 to go. Well, why do you want 12 of your remaining 60 to be at higher income levels when you can have 12 of your remaining payments be at 2-year-old income levels? There is no benefit to you being in the safe forbearance still if you're going for PSLF. And really, I wouldn't let the government make that decision for me at the end of the day anyways. So there you go. So she's a stay-at-home mom and she has no income and her payments right now are zero. So if you have a legal $0 a month student loan payment, that's not default. You're not going to get garnishments. You're not going to get offsets. You can have a legal $0 a month student loan payment and you're not going to get garnishments or any trouble for that one. Jay Don, 100K in debt due to divorce, going back to school. Better to pay off the loans, invest, or combo. One thing is, I'm always a combo person, Jay Don, always an and. You got to make the minimum payments on your student loans, of course, right? That's a baseline. You also need to make sure that you are taking advantage of all the free money that you can get, 401k contribution matches, HSA, things like that. Because Jay Don, I'm guessing you're also, you're later in life. You're not 22 anymore because you went back to school, you're getting a divorce. Like, time is ticking for your financial future, and you need to start getting money in those retirement accounts and investment accounts so that it grows for you. So by the time you get to 65, you could retire and be comfortable. So definitely an and there, Jay Don. Making sure. Michelle, when does student loan repayment start and how does it work? Michelle, I don't have the context on your situation, but if you are still finishing school or you just finished school, you have a 6-month grace period after you finish school before your federal student loans are due. You usually start getting letters in the mail from your loan servicer about 3 months after you graduate. They tell you what your options are, pick a repayment plan. You need to go online and do that. And then at the 5-month mark, you'll get a statement. And then at the 6-month mark, your first in bill is due. Emily, how many times can I refinance my student loans? You can refinance your student loans as many times as you want, as long as your credit and income is good. With that being said, we never recommend you refinance federal student loans because that loses all those federal benefits. If you have private loans, though, you shop those things. I recommend you look at them every 6 months and see if you can save. The cool thing with education loans is that education loans have no prepayment penalties, and private education loans have no origination fees. And so there's no cost to keep switching other than, your own credit and income ability to repay. Roxy, still on the save plan. What's your opinion? I don't qualify for PSLF. I've been doing the snowball method. Roxy, I don't think that anyone should still be in the save plan except in rare exceptions. I think that if your goal is to repay your student loans, the best way to do it is to get on the standard repayment plan right now. And then that way you're ensuring that your monthly student loan payment is fully covering the interest and making progress towards your principal, so that if you are doing the debt snowball, all of your extra payments are going towards principal and you're not having to deal with anything like pay ahead status or accrued interest on the loan. I don't think there's no benefit to remaining in the save plan if your goal is to pay off your student loans. JXDE, if you're in save, are they sending us any documents for taxes? You only get a tax document if you've paid $600 or more in interest on your student loans. If you're in the save forbearance, you didn't pay any interest on your student loans last year in 2025. So, and then JXDE, that is also a fair thing. I'm writing it out. I've used the money to pay off other things. So if you are looking at your payments and if you have any other debts, private student loans, credit cards, car loan, it's a fine time to pay off that other debt. I also just know, though, from 20 years of helping people with their finances, so many people talk this game about doing other things. So few people actually do those things. Thalia, do you think I should pay off my student loans or continue for public service loan forgiveness? Thalia, it's a math question, but if you qualify for public service loan forgiveness, there's very few reasons to not do public service loan forgiveness unless the math doesn't make sense to you. Like, for example, you got 8 years left on public service loan forgiveness, but your income has risen to a point where you're just going to pay off the loans anyways. Well, then just pay off the loans anyways. But if you've done the math and it's beneficial for you and you get public service loan forgiveness, yeah, do public service. We don't leave free money on the table. Especially when we're talking tens of thousands of dollars. I pick up pennies, man. I'm not gonna pass up $20,000 in loan forgiveness. And 100K in student loans. What's your advice? What's your story, man? You only have 100K because you went to graduate school. So what'd you go to graduate school for? Where are you working? Do you qualify for loan forgiveness? What's your repayment plan? There's a lot to it. Nicole, I've been paying my loans for over 20 years and no good answers on forgiveness. I'm happy to give you some answers, but I need a little more context for that. What are you repaying your loans on? Are you going for public service loan forgiveness? Are you on IBR? Have you actually paid for 20 years under IBR, or did you go into deferment for a while, forbearance? Like what's the story? Jen, I have an overpayment from PSLF and never received it. Now what? How long has it been, Jen? I usually see overpayments take 6 to 9 months to get that check cut from the Department of Treasury to you. If it's been past like 6 months, let me know and I'll give you the next steps, but it's not quick. All right. Julie, should I come out of in-school deferment on my Parent Plus loan and consolidate it and then put it into forbearance? Julie, I'm inferring that there is a lot to your story right now. So you have a Parent Plus loan for your child and you are in school right now, or your child's in school. Like, what in-school deferment are we talking about? And why are you wanting to do this? And what is the plan here? The only reason to do this is if you need access to IBR and public service loan forgiveness for your existing loans. But you also have to realize that you are never allowed to borrow a Parent Plus loan again. So that's why there's a lot of nuance to this situation. Help me understand it. I'm going to keep scrolling through these comments. Johnny, may not be answered. Oh, what got you? Should do married filing separately on taxes to have a lower student loan payment? So Johnny, this is very much a tax question, almost more than it is a student loan question. So the question is married filing separately will always raise your tax bill, always. The question is will it lower your student loan payment more than it raises your taxes? So the example that I give a lot, and if you've been here since the top of the show, you might have heard this, but let's just say married filing separately raises your tax bill by $2,400 or $200 a month. Well, does it actually lower your student loan payment by $200 a month? If it does, well, then yeah, it makes sense to file separately because you save more than you spend in taxes. But let's say you file your taxes married filing separately, so your tax bill goes up $2,400 or $200 a month. But what if your student loan payment only drops by $100 a month? Well, then for the whole year, you're in the whole $1,200, and that sucks. You don't want to do that. And the hard part is, Johnny, is that there is not one specific yes or no. It is 50-50. For 50% of people, married filing separately works out for their student loan situation. For the other 50% of people, married filing separately is more costly for them overall. And you just have to do the math and see what makes the most sense for you. All right. S'mores. My payment looks lower on pay than wrap. Should I get on pay? You absolutely should get on pay now. S'mores, with that being said, if your IBR and pay are the same, just get on IBR because IBR is going to continue into the future. I do want you to realize that pay does end in 2 years, and so you're going to have to make another choice. But that doesn't mean you shouldn't do it. You should still hop on pay and save for 2 years because saving money is saving money. And yeah, S'mores, do it right now. Lisa, can you put your loans on hold if you are going to PA school? So Lisa, you can have your loans go back into in-school deferment if you are going to school at least half time. And it usually happens automatically, but if you enroll in school and start school at least half time and it doesn't happen automatically, you can sign the in-school deferment form and have your loans go back on in-school deferment because you went to school. Neo's mama, what do I think of IULs? I think they are terrible financial products. They serve an extremely niche purpose and they are sold incorrectly 99% of the time. And that stat comes from the National Insurance Licensing Board, whatever it is. They are so missold. you overpay for insurance and you get less financial return on your money. And all the benefits that people talk about with IULs, about bank on yourself and borrow and who knows what else, there are so many asterisks that it almost always never works out. It's also interesting that most IULs blow themselves up within 5 to 10 years, and people just lose all that money because it doesn't work out. I have never seen an IUL illustration that actually does what it's like they was sold to do. Like, terrible. If anyone says IULs and they're selling you on it, the only people that benefit are the salesperson of said IUL product. Julie, we are back here. Child is in school, and I was hoping to defer my Parent Plus loan as the child is in school, but I know doing so takes away options. Okay, Julie, so I'm understanding your situation more now. So if you have a Parent Plus loan and you still have to borrow a couple more years, the real question becomes, how are you going to pay for those next couple years? So you have to realize that if you can keep your loans deferred and you can just do what you're doing right now. And when you're all said and done, the only option for you is to repay those Parent Plus loans under the standard repayment plan, and you won't have access to public service loan forgiveness. That may not be a problem for you. Like, it's a fine thing to do, but you have to go run. We have a standard repayment plan calculator on the College Investor. I encourage you to put that balance that you're going to have in the calculator and see what you're going to owe and how can you afford it. With that being said, the only reason you need to do what you're talking about doing of consolidating your loans right now is if you need to have access to income-driven repayment. With that being said, though, the con of doing so is that you can't borrow Parent Plus loans again for your child's next couple years of school. And so, yeah, it's the pros and cons. Jens, I see your follow-up comment. It's been over a year since you've been waiting for your refund. Okay, Jens, this is what you do. I'm going to give you a couple steps. Number one, Jens, is you want to go to studentaid.gov, and I want you to file a complaint. And I want you to file a complaint that says, I'm due my PSLF refund. My PSLF happened on this date. I overpaid. Where's my money? Okay. Literally, as soon as you're done with that complaint, you're going to get a case number. And then I want you to go to your senator or your representative, whichever, doesn't really matter. And on their website, there will be a casework request form. And I want you to go enter a casework request with your senator or your representative. And I want you to say that, like, I got my loans forgiven under public service loan forgiveness by the Department of Education. I am due a refund of this amount. I have not gotten my refund. It's been over 12 months. I have submitted a complaint with the Department of Education. Then you drop that complaint number in, and then that will also go to your senator or your representative. But now all of them can use this same complaint and like go chase down your information and get that thing processed. So how frustrating, but hopefully that helps give you the next steps that you should take. JXDE, I don't see RAP as a repayment option. And that is correct. The Repayment Assistance Plan, or RAP plan, doesn't launch until July of this year. So another 5 months to go. So you can run, we have a RAP calculator on the College Investor if you want to see what your RAP payment would be. But yeah. S'mores, can you explain the type of borrower who should not switch out of SAVE? Absolutely. So there's really only one situation that you should not leave SAVE, and that is if you are positive that your income is going to be lower right now, like today, in the next 5 or 6 months when RAP goes live. That's really the only situation where it benefits you to stay in SAVE, because you know your income is going to drop. And then you could take advantage of either hopping on IBR, or when the RAP plan comes out this summer, you can hop on RAP with your lower income. So maybe your 2025 tax return was lower, or maybe you're one of these unfortunate people that are getting layoff notices, something like that. And so you know in like 3 months, your income is going to drop. And that is when you want to stay in SAVE, write it out, and then hop on a repayment plan, either using your period of no income or using, your 2025 taxes because it was lower than your 2024 taxes. Those are really the only scenarios. Now, there is like the unfortunate scenario, and the unfortunate scenario is you've ran all of your repayments, you've ran your current IBR using your 2024 taxes, you've run RAP, you've run these, and you can't afford any payment. Well, then you should be using the next 6 months to fixing whatever is holding you back from being able to afford these income-driven repayment plans. Maybe that is paying off other debt. Maybe that is moving. Maybe that is getting a new job. Maybe that's selling your car. I don't know. But there are some unfortunate situations where people have to make tougher choices with their financial lives because inevitably these payments are coming. But for most people, using your 2024 tax return and getting on IBR today is the most beneficial because you can always switch to RAP later, or you can switch to a new repayment plan next year. But like, I would rather use my 2-year-old income, and I think most people would benefit from using their 2-year-old income. Maribel, are plus loans eligible for PSLF? Maribel, there are 2 types of plus loans, Grad Plus and Parent Plus. Grad Plus, yes, they are eligible. Parent Plus are only eligible if you consolidate and are on an income-driven repayment plan, and that is only possible for existing Parent Plus loans that take action or have already taken the action. Jen, I'm glad we were able to help you. JXDE, I don't see the benefit of coming out of SAVE if you can utilize that money for something else. JXDE, here's the thing. You have a set number of payments on your student loan. But it's a set number too. The payments are inevitable, but it's a set number. I don't know if you're going for PSLF as a physician or you're just going to have a set number, but you're going to have a set number. Let's call it 80 left. I don't know. Why would you want to keep waiting and know that 12 of those 80 are going to be at a higher payment than the like if you hopped on right now, you know that your first 12 would be on your 2024 income, and then your next 12, because you could certify again in February, could be on your 2025 income. So you just got 24 months of your 80 payments at a lower payment amount than you would by not waiting. That's why you want to do it. You're in a unique situation, though, as a physician, because you got a lot of levers you can pull on the rest of your finances. But the math still comes down to the math, and you're either trying to, pay off, get public service loan forgiveness. I'm guessing if as a physician, you're trying to get public service loan forgiveness. So the math is, how do I make the lowest total payments on my student loans as possible to maximize that forgiveness? So then I would also look at other things like right now, JXDE, how do you get more into your 401k and or 403b and retirement accounts and things like that, so you can lower your taxable income so that next year when you go recertify, it's going to be it won't be lower as well. A lot of levers you can pull, but that there's a fixed number of payments left that you have to pay, and you should just minimize the amount you're paying overall. Ariana, I make $40,000 a year. I have $30K in loans between my car and student loans, and I have $80K saved. Should I pay off all of my debt? Ariana, you are in a great spot, and I love that for you. Is your $80K just in a savings account, or is it like in a 401k or an IRA or whatnot? If it's in a savings account, I would say you should definitely eliminate your car note. Like, there's no reason to have a car note. Like, that's just silly. Next, though, is your student loans. If you qualify for any type of loan forgiveness program, definitely don't just pay them off, minimize your payments. If your goal is to pay them off, I would do some other things first, because you're also probably pretty young. I would make sure you max out your IRA. You have that money in savings, put it right into your IRA today. Make sure you're contributing more to any 401k or 403b that you're eligible for. And then, you can get aggressive with your student loans, but make sure that you are investing and saving for your future as well. But get rid of that car note. There's no reason to have a car note. How do I minimize my payments? Give me a little more context there on what you're looking for. Your student loan payments, because your option is applying for income-driven repayment, which is IBR right now, or the repayment assistance plan that goes live in July. Those are going to be your ways to minimize your payments. All right, guys, we are going. Oh, wow. It's already after 11 on the West Coast. If you are just joining us, my name is Robert, and I am the founder of the College Investor. And I love doing these lunch and learns. We've been doing them every single week here this year. And this is your time to make the personal finance questions more personal. Drop your questions in the chat. If you haven't liked, subscribed, and followed, please like, subscribe, and follow. That is the way to make sure that you stay informed on the latest. And drop your question in the chat. We are talking about all these things, and we've been getting a lot of different answers. JXDE, I don't qualify for PSLF. My plan was to pay for 25 years and have them forgiven. JXDE, I don't know of any physicians that's going to be a practical option. And the reason I say that, JXDE, is because you're just going to make too much money. Like if you run the numbers, like what are you going to pay over the life of your loan? Like I'm just curious right now. Let me just see. I just can't imagine that it's actually beneficial for you to like ride that out financially. So when you say you got, what do we got here? $230,000 in loans, 28%. Even as like a pediatrician, you're gonna make like 180. I don't know. So JXDE, running some napkin math here. I'm just looking. If you were to just pay off your loans, you'd pay $2,600 a month or so. You'd pay $317,000 in total. If I don't know when you first borrowed, if you borrowed before 2014, so that's why you're thinking it's 25 years, you're going to pay $376,000 in total, and you're still not going to get any forgiveness. And if your loans were after 2014, so you qualify for new IBR, you might get some forgiveness, but you're still going to pay $314,000, and you might get some forgiveness, assuming your income doesn't change at all over time. So with that being said, I don't know. You're going to have to run the math here. I don't know what you make, what your specialty is, how you plan on growing your income. But I just don't see any scenario, JXDE, where you as a physician can ride out all that time and get any type of, so you finish school in 20, I don't see it working out financially. It's going to be the most expensive path for no benefit. So just something to keep in mind. Go run the student loan calculators and see. Welcome, Lisa. I see your questions here. There's all kinds of ways to minimize monthly payments going forward. There are so many ways to get your taxable income down. You are absolutely correct on that one. Let's see here. I lost my spot. Liv, any trends in private student loan interest rates dropping for refinancing? Liv, the private student loan interest rates have dropped, a little bit over the last 3 or 4 months as the Fed cut rate. Even though they've held steady for the last cycle, they still have come down from the middle of last year. The big thing that's going to drive your interest rate on your student loan refinance is what your own credit and income is. All those teaser rates are all for like 825 credit, and you make like $500,000 a year. So they have come down. You should shop them. You should compare and see. Kimberly, I have defaulted student loans. What's the best way to get back in good status? So the best way is student loan rehabilitation. You call up your loan servicer. You say, I want to rehabilitate my student loans. It does take 9 months of payments. And then the reason I like rehabilitation is because it will remove the default from your credit. So you get back on track with your student loans and it will improve your credit a little bit. If you can't do that and make that happen, you can consolidate too. That's the other option. Consolidation is more instantaneous. It'll take 30 to 60 days to consolidate your student loans, but the default will remain on your credit as a result. Those are your two main paths. You do have a third of just paying off the student loans, but you probably wouldn't be here at if that was the case. JK, do I sell my ESP, at 108? So you're going to make $8 a share. I mean, that's really up to you if you think that making what is that, $2,000 is worth it or not. Yeah, the higher income earners definitely have a lot of levers they could pull. So Lisa is sharing some awesome tips there on lowering your income. Because remember, guys, for income-based repayment, your monthly student loan payment is based on your adjusted gross income minus the poverty line, depending on how many people are in your family size. So if you can lower your adjusted gross income, you could lower your student loan payment. And business owners, high net worth professionals, they typically have many ways to make that happen. Why did my debt that was in collections fall off my credit report? Kindness is a muscle. It can happen, but just because it's not on your credit report doesn't mean it's not collectible. Your state laws will vary. You should understand what is happening with your debt. BB, my husband is trying to get off SAVE for 4 months. How backlogged is the Department of Education? There is a backlog, but most of the existing applications are being processed within 3 to 7 days. So BB, I would encourage your husband to go on the new studentaid.gov, apply, make sure that they're linking their tax return if that's the way you want to go. And those applications are typically being processed in 3 to 7 days. Definitely should put in a new application if you want to move plans. There are exceptions. Yes, I have seen issues. I have seen people being delayed for long periods of time, but that is the exception, not the rule these days. Julia, I refinanced my student loans in August. When can I refinance again if it has gone down since then? You can refinance anytime you want. There is no prepayment penalties or rules against doing it often. ECKM, do you think PSLF is at risk for going away? Scared about the new regulations in July. PSLF is absolutely not going away. It would require an act of Congress to do so. So there is no chance that that is going to happen. Now, there are some backdoor ways they are limiting PSLF. You just mentioned the negotiated rulemaking about limiting the definition of a qualifying employer. And while those are set to go into effect, there is a very, 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 it's already been challenged by 3 different lawsuits. So that's going to be a TBD. And then the big thing though, ECKM, you have to realize is legislating out the avenues for PSLF. So what they did with Parent Plus loans. Parent Plus loans simply don't have access to a qualifying repayment plan, and that's why future Parent Plus loans simply can't access PSLF in the future. So that's more of a risk, but I see that also as a very minor risk. The actual bigger thing with Parent Plus loans was to send profitable borrowers to private lenders. It wasn't about eliminating Parent Plus or PSLF access. So generally, PSLF is fine. 150,000 people are on track to get PSLF this year. Over 1 million people have already received PSLF. It's fine. Ooh, Ebony, are there any updates on buyback and how does that affect the tax bomb? I applied last September. Ebony, PSLF buyback is taking up to 3 years to process. As we've said over and over and over again, you need to do the math because I don't know if you're going to have much benefit from PSLF buyback, because remember, you're not buying back at your save amount. You are buying back at repay for the first 12 months. And then if you started in September, your payments for July, August, and September are going to be at whatever you're supposed to be paying right now under IBR. And you're going to be delayed 3 more years. So like you need to do the math to see what your savings would be, because for you, there's a high probability that it'll be faster and cheaper or the same to just get on IBR right now and just finish it the old fashioned way. So that PSLF has no impact on the tax bond because PSLF is always tax free federally. ECKM, yeah, it's being challenged by like, there's 3 major lawsuits. One is a bunch of nonprofits, one is like a bunch of states, and one is a bunch of cities. So it's being challenged in multiple ways. BB are upcoming changes to Parent Plus loans. BB Parent Plus loans are massively changing in 2026. So starting July 1st, new Parent Plus loan borrowers are going to be capped at their borrowing of $20,000 a year or $65,000 in total. They will also be restricted to only being able to repay their student loans under the standard repayment plan. The result of that is, of course, they will also not be able to have any income-driven repayment plan options, and they will not have access to public service loan forgiveness because they don't have a qualifying repayment plan to repay the Parent Plus loan under. Existing Parent Plus loan borrowers also need to be mindful of this change, because if you have not consolidated and enrolled your existing Parent Plus loan in an income-driven repayment plan, after July 1st, you will not be able to. So that is very important to keep in mind. Penguino, when should people on Save move to another plan? I haven't changed since Save lets me avalanche. Penguino, you should move now. And if your goal is to repay your student loans with the avalanche method, just get on the standard repayment plan. Make sure you're making your monthly payments. And that way your avalanche is always going to go to the principal, because you're not having to worry about any accrued interest and funky ways they apply it. So just get on the standard plan today if that's your goal. If I am currently in IDR, do I need to move out of it? So IDR is not a plan, Quiz D. IDR is like a category of plans. So inside IDR, you have IBR, you have pay as you earn, you have ICR, you have save, and then you have the upcoming wrap plan. So if you are in IBR, ICR, pay as you earn, you don't need to do anything. If you are in save, you're in forbearance, so you're not paying your loans. You need to make a decision, and the wrap plan doesn't come out yet. It comes out in July. Zachary, if I consolidate in April and switch to IBR in May, can I stay on that plan permanently? Zachary, I don't know why. If you have a Parent Plus loan, that's the only reason you need to consolidate. IBR is also not going anywhere. So IBR will continue to exist into the future, but I don't understand the consolidation thing. And then that's a very tight timeline, because consolidation will take longer than that. I'm in save. Do I need to switch? We highly recommend that if you're in the save, you run the numbers, Mega. You should run the numbers and know what your IBR payment is today using your 2024 tax return, because that's probably the last tax return you filed. And then you should also run the numbers on what the upcoming repayment assistance plan will be, but that's going to use your 2025 taxes. And then you should choose whichever is cheaper for you. And so for many people, switching right now onto IBR will be the cheaper option. I'll take it from here. PSLF counts haven't been updated since December. Well, I'll take it from here. Did you file your January employment certification already? Because it's literally like February 4th and the government shut down. So that makes sense to me, because you need to file your covered employment certification form, and then the government would have to process it. And or maybe they're not shut down. I don't even know. I haven't watched the news. Try to stay out of that one. My daughter graduates in May and have Parent Plus loans and student loans. What do I need to do? Mama K, you need to understand how you want to repay those Parent Plus loans. Your daughter can figure out her loans. She has a 6-month grace period after she graduates, and then she can choose a repayment plan. But you, Mama K, with your Parent Plus loans, if you need to have access to income-driven repayment plans and public service loan forgiveness because you qualify for it, you need to consolidate by March and enroll like right away, because you have to have that done. You have to have the consolidation done no later than June 30th. And then it makes sense to just start making your payments because you want those qualifying months for public service loan forgiveness. So that's what you need to do. If you don't qualify for public service loan forgiveness and you don't care about income-driven repayment plans, well, then you don't need to do anything. And when they tell you it's time to start repaying, you just start repaying your student loans. How do I consolidate? Where do I do that? Studentaid.gov, right there on the home screen. BB, what difference does married filing separate? What income level difference does married filing separately make sense? It's not just about the income level, BB. Where people get in trouble with taxes and why married filing separately is always going to cost you more in taxes is because you lose all these deductions. For example, all the new deductions, the no tax on tips, no tax on overtime, things like that, you don't get to claim them when you file separately. And there's like another half dozen or more tax deductions and tax credits that you can't claim if you file married filing separately. So it's not even about the income level. It's about what your tax situation looks like. And that's why you got to run the numbers. Mego, what's the avalanche method? So there's two main choices for paying off your debts. And this is for people that are trying to repay their debts. Oh, sorry, I lost your comment there. Let's see. So what is the, there we go. Of course, I clicked the mouse button here. What's the avalanche? So there's two main methods for repaying your debts: the snowball method and the avalanche method. The avalanche method is you line up all of your debts from highest interest rate first to lowest interest rate first, and you pay off the highest one, and then you just keep working your way down. That's different than the snowball method, which you might have heard of. The snowball method is where you line up all your debts by smallest balance to largest balance, and then you pay off your smallest balance, and then you keep rolling down, and it snowballs to them all. The avalanche method is mathematically the better method. But generally speaking, the difference you save between the two methods is very minimal. And so it's more of, are you a math-minded person that wants this avalanche, or are you a psychological-minded person and you want those wins of paying off small debts to like feel good, to keep yourself motivated? That's kind of the psychology behind these methods. Ebony, with that being said, if you're eligible for PSLF, get on a plan. Don't waste time. Ebony nailed it right there. Literally, you're just costing yourself months and months of time. Pitt Stickum, what's the best plan if you're seeking public service loan forgiveness? Well, you really only have two options today. The income-based repayment IBR, and then starting in July, you'll have the repayment assistance plan. Those are going to be your two methods if you're seeking PSLF. You can still be on pay-as-you-earn and ICR, but both of those are phasing out going forward. Mama K, yes, studentaid.gov is where you consolidate. If you receive a bonus in equity, will this bonus amount count towards income-based repayment? Yeah, if you are offered incentive stock options and equity and things like that, and it's reported to you on your W-2, it will absolutely count towards your payment. It's really what your adjusted gross income is for the year. If it's not reported on your W-2 because it's not a taxable event, well, then it's not going to impact your adjusted gross income. It's not going to impact your IBR payment. All right. All right, guys. We are still going here. We have been going for an hour and a half. My name is Robert. I'm the founder of The College Investor, and this is your time to ask your personal finance questions about student loans, financial aid, saving, paying for college, wherever you want to go with this. If you haven't liked and subscribed and followed, please like, subscribe, and follow. I love the hearts. Thank you so much. Throw those hearts down because they go a long way to boosting the TikTok algorithm. And we will keep going on your questions here. And I'm still scrolling through these guys. So I love it when you guys do a big burst, but it does take me a minute to catch up. Sorry, what's a good way to reduce your adjusted gross income for moderate to high earners? Penguino, contribute to your 403B, 401k with pre-tax, not Roth. Contribute to a traditional IRA, contribute to an HSA. If you're a business owner, you can have those expenses in your business that qualify, and that'll count for lowering your gross sales. If you're a doctor, invest in a medical practice. You get to have all the real estate stuff that helps you out, potentially lowers your tax bill. Quantum SC, 21K on my student loans. Payment is too high for a manageable save payment. Well, Quantum SC, remember, save is dead. You got to run the numbers for what your IBR payment is, because you're gonna have to be making a payment here on your student loans in the next 6 to 9 months. I don't think they're gonna let you go past September or October. So the question, Quantum SC, is it better to get on IBR right now using your 2024 tax return? Or do you want to wait until this summer to get on the repayment assistance plan using your 2025 tax return? Those are really your two main options. You also only have $21,000 in debt. So if your income has significantly increased, you might just be in the boat to pay that off, Quantum. So Punky Pal, will save months count towards PSLF buyback? If so, what happens if your payment is under $20? So save months don't directly count for PSLF, but yes, they are buybackable, Punky. But that doesn't mean that's a smart move to do, because here's the thing: your save buyback will be calculated in 12-month intervals, and it's not based on your save payment. Save is dead. So we are seeing buybacks processed again, and they are still doing repay for the months. Nothing has been processed for 2025 yet. All the buybacks were still for 2024. But the 2024 period is under repay, Punky, so it's already higher than what you would have paid under save. So if you had a $20 save payment, I bet you'd have a $50 repay payment. And that $50 repay payment would only count from July of 2024 to June of 2025 in that 12-month period of time. And then starting in July of 2025, Punky, the buyback would be calculated under whatever you're supposed to be paying right now under IBR. So whatever you go on the studentaid.gov and you see what your IBR payment is, whatever that is what you're buying back right now. So what are you still doing in save forbearance? This month of February, you get zero savings, zero mathematical savings from being in the save forbearance if you need PSLF. It's the same payment. You're either buying it back or you're paying it this month. But here's where buyback gets you, Punky, is buyback takes 3 years. 3 years from when you hit 120 payments. So you are literally just costing yourself years for zero savings. So please just get out of the save forbearance if you're going for PSLF. Get on IBR right now. There's no benefit for you staying in there. Zen, I have a bachelor's and I want to go back to school, but not for graduate school. Do I still qualify for FAFSA? No, you're not going to get any aid for a second bachelor's degree, Zen. You might get aid for some other things, but you won't get a Pell Grant. You do have to deal with the student loan borrowing limits if you go back and you want to take out student loans. Zen, I would question why getting another bachelor's degree isn't going to help you make more money. Your skill set's going to help you make more money. Go figure out how to do that. Yeah, BB, it's a big tax question. That's where, and I would say, BB, married filing separately is honestly a bigger tax question than the student loan side of things. And there's no like one size fits all. There is so many situations. It's like 50-50 on who benefits and who doesn't. And there's no Like, I can't tell you one way or another. All right, guys. Are you able to pay off numerous loans separately? JXDE, you can make additional principal payments by loan. Like you can log into, I don't know what your loan servicer is, but Nelnet or Aidvantage, log in, you can choose your loan. You can make additional principal payments by loan, but the additional principal payments will only be applied once you've cleared out all the accrued interest on said loan, because the law says fees, interest, principal. That's how your payment has to go. Christina, last year the FAFSA didn't give me anything because of my parents' incomes. What happens if I don't fill out the FAFSA now? Well, I mean, nothing happens to you, but you also can't get access to federal student loans, Christina, if you don't fill out the FAFSA. And so that's not necessarily going to be helpful for you. Excuse me, go helpful for you. Also, with that being said, is how do you know you're not going to qualify for any aid? I always recommend that people fill out the FAFSA. It's like a lottery ticket for some people, sure, but it takes 20 minutes and it could unlock financial aid for you. BB, any good news about the RAP plan? All I hear is scary news. You know, the RAP plan isn't that scary. It's actually a pretty good plan, especially for people that make less than $100,000 a year. I know that, you know, people are always worried about change, but when you do the math, it's a pretty decent plan, especially if we all say we want to help people that make less than $100,000 a year. The RAP does that. So what are the positives about RAP? Well, the RAP has no negative amortization. So that means if you don't pay interest, or sorry, if your payment doesn't pay off all your interest every single month, the interest doesn't get added to your loan. It just gets forgiven. So your loan will never grow beyond whatever you enroll in the RAP plan at. So people, that's a good one. There's also a $50 a month principal reduction subsidy. And that means that if your monthly payment does not pay off at least $50 a month, the government's going to make sure your loan balance goes down by at least $50 a month. Again, that's a pretty positive one. So yeah, you do have this trade-off of having to pay your loan for an extra 5 years if you actually make it all the way to 30 years. But if they know that most people aren't going to make it that far anyways. So Pinguino, 400K in student loans, dentist, and doing avalanche. Should I IBR if my standard would be higher? Pinguino, I mean, it's a math game, right? So as I was talking to JXDE, you can go run the calculator. We have one on the College Investor, and it'll tell you what you're going to repay in total over your loans. And so you could go to IBR, and then you can start paying, because maybe that gives you a little buffer in the short term. But I would venture that you're going to see your income grow over the next 5 to 10 years. And so it's really just about getting out of that as fast as you can. Quantum, if you've been paying for 25 years, yeah, you should get on IBR and wait for forgiveness. Absolutely. Nunes says, what is PSLF? And I'm guessing he means PSLF, Public Service Loan Forgiveness. Nunes is what we're talking about. Public Service Loan Forgiveness is one of the largest loan forgiveness programs in the United States. It forgives your student loans after 10 years if you make payments for 10 years under a qualifying repayment plan and you work for a public service organization. BB, I don't know what you are talking about with your $600. What parents are doing for kids? Mir says, what are parents doing for kids going into college? I refuse to do a Parent Plus loans. I have the 529 and Acorns. Mir, the big thing that you need to do then is make sure you're having very transparent conversations with your child about how much you have saved and what you are willing to contribute for your kids' college, because then your child needs to apply to schools that they can afford or are generous with financial aid to make it so they can afford it. Because Mir, you have to realize that your child can only borrow $5,500 themselves as a freshman. Other than that, anything beyond that, it's going to require you one way or the other. It's going to require you to take a Parent Plus loan, or it's going to require you to co-sign a private loan, uh, or you just pay, right? So transparency is key. Also, identifying options that work given your financial circumstances. That includes going to community college and transferring. That includes having your child going and working for an employer that will pay money towards their college. That could include making sure that they are taking a large number of AP credits, dual enrollment credits, so that you only go to school for 3 years or even less. Like, there are lots of options there. The other important thing to realize is a large cost of a 4-year institution is room and board. Room and board is actually the larger cost for most people, not tuition. And so looking at living at home is a massive game changer for college students trying to pay for college. So these are all conversations, though, you got to have. Make sure you're having it by the time they're like a freshman or a sophomore. If they're already a senior or applying, like, you're going to hurt some feelings. Win XS 765, they have no clue what they are doing, so I would rather not pay now and buy back. I can tell you that they absolutely have plenty of clues on what they're doing, and they know that you doing that works out more beneficial for them, and you are probably just hurting yourself, WinX. You're not hurting the government, and it is very planned what is happening right now. JXDE, I don't understand how we can pay off interest if it accrues daily, because if you're on a standard repayment plan, JXDE, it will get itself down. So you're making all those payments, and then you eventually get to a point where it's only accruing up, and then you make beyond your standard repayment amount, and it will start knocking off your principal there. Marco, I wouldn't say people making over $100,000 are screwed on the RAP plan. They just have a higher student loan payment. And this is where I get very confused by what people want, because I thought we were all here to try to make sure that people like making less than $100,000 a year and low income families were supposed to get the benefits, not high income families, Marco, that are making over 6 figures a year. That's what the government keeps telling me. What do you want? They actually made a program that does exactly that, where people making less than 100 pay less and people making over 100 pay more. But heaven forbid. I don't know. RAP is for sure launching in July, BB. It absolutely is. Pitt Stickum, direct loans qualify for PSLF. Yes, they do. I applied for PSLF buyback, switched to IBR. Can I go into deferment if I get a new job? You can go into deferment or forbearance if you get a new job. Just realize that PSLF buyback is taking upwards of 3 years. So I don't know what you're trying to buy back, how much time, and what the cost is. You might not want to. You might just want to ride it out or just do PSLF the old-fashioned way. But you got to do some math there, Dima. You got to do some math. KCHAR 45, what about Parent Plus loans? What about them? I'm happy to answer your questions about them. Does taking out a loan for college make my payment stay the same or go down? Shows you can't pay it. Micah, I don't know what you're referring to. Lots of community colleges do now offer free colleges for families. There are some states that have no income limits on it too, BB, like literally just free community college. Quantum is the IBR application. IBR application's online. It's available. You just go to studentaid.gov and do it. It's very fast and effective. Run, mom, wife, life. Daughter works so hard, wants prestigious school. The financial aspect doesn't matter to her. Run, mom, wife, life. Ask her why she's even going to college then. Like literally, why does she want a prestigious college? Why does she want any college? Like, your future employer does not care that you got an A in high school calculus. It doesn't make a difference. So why is she doing what she's doing for her life? These are those conversations that they're very important. One thing too, run mom wife life, is we have a really cool tool, the how much student loan debt can you afford calculator. I encourage you and your daughter to sit together and do it, because you can put in whatever she wants to graduate in. Let's just say she wants to graduate in economics. I don't know, I'm just making it up. And then we take the BLS, the Bureau of Labor Statistics data on what economists earn. And so you can see what you're borrowing, how it compares to what your starting salary is going to be. And it'll show you how affordable it is. Because I also think your daughter, wants to have a comfortable life. She probably wants to live in a nice apartment. She probably wants to have a nice car. So when you start adding the cost of all these things on, like, what's her plan? You got to have that conversation. Like, that's key. JXDE. So your plan is standard, IBR, or the upcoming repayment assistance plan. That's it. Those are the three options. There's not a lot out there. And I think that's what it sucks, but that's what they are. Lissa, how can I make a car payment with zero equity on a car we weren't able to trade it in because of zero equity? Lissa, I'm sorry, that sounds like a really sucky spot to be in. So you need to really dive into your budget line by line. What's the income? What's the expenses? You need to grow the income piece by side hustling, by getting another job, by working overtime. I don't know. Your spouse together, because you're saying we. So the two of you go side hustle together. I don't know. And on the income side, you need to start cutting. Get out of this thing. Pay that thing off. It's going to make a lot of uncomfortable choices for you guys. It's not easy, but you got to do it. And the sooner you do it, the sooner you can get past the uncomfortable choices and start making more comfortable choices. Dima, currently on Save, have 104 out of 120 payments and want to start making payments, but I left your job. So you got to find another PSLF qualifying job. I was always told to take a loan even if you can't pay out of pocket. So it shows you can't pay in full. Micah, I'm still not understanding a word you're saying here. You should never borrow a student loan or any loan if you don't need to take a loan. Number one, it doesn't make any financial sense. Anyone that's talking to you about credit, Micah, is also predatory. Only predatory people talk about credit. I promise you. BB, okay, no, sorry. Run Mom Life. She wants to attend law school. That's cool. There's many paths to law school. Has she talked to some lawyers? Does she understand what kind of law she wants to pursue? Does she understand the financials of it? Big law, corporate law, public service law. How does she want to get there? What does she want to do? It's so vague. So I don't know if you've already talked to lawyers or talked to people in the field. BB, I'm in IBR and I don't need to do anything. IBR is never going to become RAP. IBR is always IBR. So IBR just stays IBR and just keeps going along. You can opt for the RAP plan if you want to opt for the RAP plan, but you don't have to opt for the RAP plan. And BB, you nailed it. I went to the cheapest college. No employer has ever cared where I went to college. Literally, no employer cares where you go to college. And then after your first job, literally no employer cares. Like by the time you're 35, no one ever cares about where you went to college. All right. Micah, take a subsidized loan even if you can pay the college in full because it shows you can't pay in full. Micah, none of that makes any financial sense. Like literally, you don't get any benefit for that. Like, I don't know why. If you can pay, pay. If you can't pay, take a student loan. JXDE, re-answer my question. I'm guessing, was it your question about your student loan repayment plans? So there's only 3 repayment plans available, JXDE. You have the standard plan, which pays off your loan after a set period of time. You have IBR, which is income-based, which can lead to student loan forgiveness, but like we kind of ran some napkin math, you might pay more doing that. And then starting in July, you have the new repayment assistance plan that comes out, which is also income based. And again, you may or may not pay more over the life of your loan. You just got to run the calculators. I don't have the calculators. I don't have your numbers, but we have the calculators. And BB just says, is there a calculator to help estimate your wrap payments? Darn right there is, BB. Go hit the link up. And then the College Investor has probably the best wrap calculator that's out there. And you can go run your numbers under wrap and see what it would be. All right. I have ICR from a Parent Plus loan user. That's great. You're in ICR for your Parent Plus loan. You can enroll in IBR now if you've already made payments under your ICR user. So remember, IBR was never an option for Parent Plus loan borrowers before, but it is now, user. So go and look at IBR. Don't just recertify ICR because you might be able to save money on your payment under IBR. I am going from no income to a decent wage. Not really sure what to do with it after I graduate soon. Well, congratulations. That's what you went to college for, to go earn a decent wage. So, budgeting 101 is make sure you're saving for yourself every single month. Make sure that you are investing in your company's 401k or 403b. Try to contribute to a Roth IRA. And of course, if you have any debts, try to get debt free by paying those off. You don't really need to overthink it. And just be proud of yourself. That's literally what you went to college for. JXDE, but like, let's just say your interest on your loan is going to accrue at $5 a day. I'm guessing you're not making a $5 payment. I'm guessing you're going to make a $500 payment. And so once you get caught up on your accrued interest by making those $500 a month payments, you'll get to a point where the interest is only accruing $5 a day. So let's say it's, whatever that is over the whole month, it's 30, 120, right? But your $500 payment is going to pay off the principal. It's just you have to get to that point. And then even though interest is accruing every day, your payment should significantly pass that up. IBR is not available to me because of my income level. IBR is available now to everybody, regardless of having a partial financial hardship. Quantum, you can apply for it. Maybe you have another issue like a Parent Plus loan. If you have a Parent Plus loan, yeah, ICR is only available. You have to make a payment under ICR first, and then you can switch to IBR. Mike, did they give a date when they will start the garnishment? Will start back? No, so wage garnishment is paused, offsets are paused. The press release said this was to launch the new repayment assistance plan, which that starts in July. So we don't know when it's going to start back, but my guess would be this fall. My guess is that it's all going to go hand in hand. Like if you're in save and whatnot, you're going to have to choose a plan by September 30th. And if you don't, they're going to start the process again. With that being said, Mike, you should not be in default. You are literally just hurting yourself financially. Get out of default right now. Go rehabilitate your student loans, consolidate them, whatever path is best for you. But you're only costing yourself more money remaining in default on your student loans. All right, guys, we have caught up on the questions. Man, this has been a great live today. We're still going to go for here another 20 minutes or so. So if you are still with us, make sure you've liked, subscribed, and followed so that you can always stay up to date on the latest in higher education and personal finance news. I appreciate all the likes of the live. It goes a very long way to boosting the algorithm. We hit 5K likes. Nice. That is awesome. And then, yeah, drop your questions in the chat. BB, paying a professional to do your taxes this year. There's nothing wrong with that. I will encourage you though, BB, is have the professional run married filing jointly, married filing separately. I promise you that the professional will not understand the student loan piece of it because 99% don't. I talk to so many financial planners and accountants on this exact topic and try to educate them. So what I want you to do though is they'll give you your numbers for adjusted gross income under both married filing separately and married filing jointly. Then you go over to the calculator, you run the student loan payments, figure out your yearly student loan payments on both of them, and then go back and decide which one's the better path forward for you. Quantum, yes. So applying for a new, so IDR is, remember, the overarching bucket. IDR isn't a specific plan. IDR means you're in IBR, ICR, pay as you earn, save, whatnot. When you apply for a new income-driven repayment plan like IBR, ICR, it is a new application. You do have to apply for it. It's the same application you actually recertify with, so exactly the same. All right. Welcome, guys. If you are just joining us and hanging out on the sidelines, Amanda and Joanna, Robin, Patricia, Caitlin, Tamara, welcome. Drop your questions in the chat, guys. If you have a question, I know a lot of people, though, they just like to watch everybody else's question, which that's fine. Quantum, it's going to be a math game. So if you have been paying over 25 years, you have to be enrolled in IBR right now, or you won't get forgiveness. But hopefully, once you make that IBR payment, they will see your 25 years of history and you'll get the remaining balance forgiven. So, but you have to be enrolled in IBR right now to get forgiveness under time-based loan forgiveness plans. Do you think taking student loans can be worth it depending on your major and if you'll be able to pay it off relatively quickly? You know, student loans themselves aren't the problem. It's how much you pay for college. So a bachelor's degree is generally always worth it if you're paying less than $30,000 to $40,000 in total. Pretty much always a positive ROI. Literally very, very few times that's a downside. When you get up into the $40,000 to $60,000 range, it gets a little iffy, and $80,000 is about the cutoff on when a bachelor's degree stops being worthwhile. Then when you add debt to the equation, it can compound that problem. It's just, you know, and what do I mean by being worth it? Like if you're paying cash right now, $80,000, you just put that in the S&P 500, you'll be wealthier at 65 than if you went to college. So that's what it means. Advice on being ultra aggressive towards loan versus investing in the future out of school. Well, Haley, remember 50% of people qualify for loan forgiveness, 50% of people don't and should pay off their loans. If you qualify for any type of loan forgiveness, public service, teacher, employer-based, whatnot, you should be maximizing your loan forgiveness, which also means paying the lowest legal amount required by law to make that happen. If you're going to pay off your loans, then just start snowballing them. But I'm very bullish that you should always be investing as you go. So if you're eligible for a 401k or 403b, you should be doing your IRA, qualifying for an HSA match. You got to invest for your future because you're only 22 once, you're only 25 once. And the biggest part of investing is actually time. Time is your ally. And it starts to work against you and be your enemy by the time you're 50. But when you're 22, when you're 25, time is your ally. And putting in $100, $200 compounds so much by the time you're getting close to retirement that you don't want to pass up that time. Robin, any options to relieve Pell Grant overpayment other than paying in full? I really don't understand understand your question. You had a Pell Grant overpayment and they're asking for it to be come back to you. Yeah, you just got to pay it back. What is your approach in asking a university for a full ride for graduate school? Um, I've, I've like, I don't know if I've ever seen it, Miss Valedictorian. Like I don't have an approach because graduate school just typically doesn't give any type of generous financial aid. I would look for industry and trade group associations in the field that you want to get a graduate degree in to see if there is any type of it. Or if you're going into some type of research field, I know that you can get fellowships and assistantships from the school and it's work, but they'll pay for that degree for you. But it's not like a full ride scholarship in the sense of like they just give you like free money. Like you're working as an assistant or a fellow at the school and they will pay for it. I know there's trade groups and industry associations that will help pay for it. Again, I need more context on what this is, because graduate school is also a big. I mean, there's I want to say there's 30,000 graduate degrees in America, something wild. Christian, 5K left on my student loan debt. I have the money, but it would empty my savings. What do you think? I've never met anyone that's regretted paying off their student loans. What are you doing with that money otherwise? Is it in a savings account? Do you have an emergency fund after that? And then you don't have to do it all at once, too, Christian. Like if it makes you feel better, pay $2,000 today, and then save up another little buffer and pay another $2,000. Like, remember, guys, all this stuff doesn't have to be so and or or it doesn't have to be so or like definitive. Like you can do two things at once. All right. All right. Master's social work, looking to attend a private university, but the tuition is about 21,000 for a year. Miss Valedictorian, please, 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 please be very, very careful with a master's of social work. Uh, I feel bad saying this, but it is one of those degrees that just does not pay off financially. You will break even. I don't think you're going to be in the hole, but for the amount you spend, it takes you 20 years to just break even on the degree. So can you find cheaper avenues for it? If you work in public service, I don't know what your goal is after private practice or public service. You have public service loan forgiveness, but only for what you borrow federally. And remember, the new loan caps for MSW is going to be $20,500 a year, which you can make it. You'll have to pay like $500 out of pocket or whatever. But just be very careful and run the math and know that. I have such like a heart for the social work profession because the math of the degrees don't make sense, but the degrees are required for the job. So it's a sucky place to be. Haley, should I refinance my loans for lower interest even though I have no chance for PSLF? Haley, you can. I think also it's not just public service loan forgiveness. It's the benefit of federal student loans. It's income-driven repayment plans. It is, hardship options like deferment and forbearance. So you can. It's just you're going to lose all those benefits. If you are debt snowballing or debt avalanching, it really doesn't make sense. The delta of your interest is not going to be that big of a savings. Have you run the numbers and seen what it is? I generally don't find interest to be that impactful to most federal student loan borrowers. The interest rates aren't bad compared to other types of debt. Most people can't refinance to save that much. And if they do, it's like 1 or 2%. But for someone that's debt snowballing and paying them off aggressively anyways, like, yeah, go for it. I mean, it might save you like a couple $100, but I also don't think it's going to be like the game changer that makes everything like amazing for you. Lavender, thanks for sharing your thoughts. Worked as a student loan servicer for a decade. Student loans are a trap. Christian, what are some things you recommend to do before turning 30 years old? Honestly, Christian, it's save until it hurts. Live like you're still 18 years old all the way through your 20s. Minimize those expenses. Spend all your time, because it's a lot easier to side hustle and earn more money and work multiple gigs and do all that stuff when you're 20 to 30, likely before kids and likely before a family. Because it becomes harder and harder to do those things. And if you save 50% of your income from 20 to 30, you're likely going to be a millionaire and be able to retire early in your 40s. What debt to income ratio do you think it's no longer worth the degree? It really depends on the degree and the person, but for a bachelor's degree, you really shouldn't spend more than $80,000 is about the absolute cutoff. The data says between $40,000 and $80,000, depending on gender and degree. And yeah, $40,000 is pretty low. Graduate school is very, very iffy. About 40 to 50% of all master's degrees programs have a negative financial return on investment. Now you get to professional degrees like doctors and those, like 85% of professional degrees have a positive ROI. So if you just want to look at the math, it really depends on the person and the situation. But like, to me, I kind of use $80,000 as a hard cutoff. Borrowing beyond $80,000, or even just paying beyond $80,000 for a bachelor's degree, is where you start seeing people get into a financial trap. You would have, especially if you're paying cash, like you would have made your child richer by just putting the $80,000 in the S&P 500 and giving it to them at 40 than putting them through that college. Tessa, how should I go about private loans for grad school this fall? Not sure if DPT will be professional. Well, Tessa, you always start with the federal, regardless of whatever the federal government does. So borrow your $20,500 if it's not professional, but it's just grad school. And if it's grad school, if they end up changing it to professional school, take your 50. But it starts with filling out the FAFSA and borrowing your federal loans. If you need to supplement, the lenders are out there. We have a list, best private lenders. Just go on and get 5 quotes and see who gives you the best rates. Tessa, I do want you to make sure you understand what it's going to cost you to repay these loans, though, and what do physical therapists earn. And I think that's DPT. I see so many initials. And understand what your career outcome is going to look like, because, it can get expensive. Christian, thank you for the love. That is nice to see. And the fire. I'm thinking I'm going to learn some things here. Lavender Haze, thank you. 42K a year for a bachelor's degree in information systems and supply chain. $42,000 a year for college? Or $42,000 a year is what you're going to earn after you graduate college? Because like, Lordy, I would say $42,000 a year for a bachelor's degree is 100% not worth it in any way, shape, or form, no matter how you slice it, especially if we're talking 4 years. Sarah, the job market's so bad right now. We think the next best thing to do is grad school. Sarah, I've been doing this since 2009. I graduated in the height of the great financial crisis. I know bad job markets. I also know that everyone that goes, not everyone, I'm generalizing, but so many people go back to school in a bad job market only to leave school and have wasted so much money and find themselves in a worse financial situation. Going back to school does not solve a bad job market for you. cobbling together side hustles and not taking on debt gets you through a bad job market. Like, don't just push off the uncertainty, because all that happens, Sarah, is you end up on the other end as being overeducated and underexperienced, and you have a lot of debt and you don't have any skills that employers want to align with the degrees you have. Tessa, I'm not the expert in all the nuances of all the PT stuff and how much you earn, but just do the math. That's it. It's just a math game. 215 Prime, does financial aid cover the cost of attendance, tuition, housing? Those are all things that can be covered. So your school will provide a cost of attendance. The cost of attendance has direct cost of tuition, fees, if you're living on the room and board, or if you're living on campus, housing, and then they have indirect costs like food, housing, whatnot, if you live off campus. You can borrow up to the full cost of attendance. Doesn't mean you're going to get offered that, though, 215 Prime. Schools have no obligation to provide you any type of financial aid. The federal government offers freshmen $5,500. They offer parents $20,000 in student loans. You can get a Pell Grant. States have grants. Schools offer their own scholarships and grants, but they're not obligated to. Wolfie's Pack, the cheapest state college we found, is $35K. So Wolfie's Pack, I can already tell you that you are including room and board in that number, because there is no state college in America. Actually, I'm not going to lie. There's one state college in America, William and Mary's, but no other state college in America besides them charges over $21,000 a year for tuition. So the fact that you're at 35K means that you're including room and board. If you are borrowing money for school, I just have a question for you. Do you normally borrow money to send your kids to live at a hotel? Do you borrow money to go on a Disney vacation? Do you borrow money to go on a cruise? Because you should make sure you're separating education from experience. And I know you want to give your child the best experience. And if you have the cash, buy whatever you want to buy from an education and experience perspective. But if you are not paying cash and you are borrowing, you do not have to pay that much for education. There are many ways to get a college 4-year education, both at a state college, starting at a community college, whatnot. But you're paying for room and board there, and you're actually borrowing, if you're borrowing that, to have your kid live away from school. Like, let's just like reverse it. If we weren't talking about college, would you say like your kid wants to move to another city and I'm going to take out loans just to fund their apartment? Would you do that? Like, this is how we're all, like, both parents and kids are all getting themselves stuck in bad financial situations in their 20s, 30s, and 40s because they're making choices that don't reflect the economic reality we're in. I wish it was cheaper, but I'm not here to talk about the what ifs. I'm here to live in the actuals. Zach, eBay taxes by yourself or get a professional? Zach, if you were selling stuff on eBay, first off, kudos. That's my favorite side hustle. I have been selling stuff on eBay since 2001, and I still love selling stuff on eBay. I absolutely love it. It's not hard to do the taxes by yourself, but you really need to understand what you're doing. If you've never done it before, it doesn't hurt to have a tax professional do it, but you're also paying for that professional, so make sure they walk you through it. If you know what you're doing and you understand it, it's really easy to do online. But again, it might be worth it the first time around to have a professional walk you through it. You have to guess, how much debt should a special ed teacher come out of school with? Well, the cool thing with being a teacher is that teachers all qualify for public service loan forgiveness. So if you work as a teacher for 10 years after graduation, any remaining balance on your student loans are forgiven. So you do have a little bit of flexibility there. However, I also know this from experience, is that special ed teachers have high burnout rates, and it can be very challenging to stay a teacher in that specialty for 10 years. Now, you just have to work for a school district, so maybe you start as a special ed teacher and move to something else, but you have to teach for 10 years, you get your loan forgiveness. Still, though, A good rule of thumb is you really shouldn't be going past that 40, 50, $60,000 a year, because even for that 10-year period of time, you have to make payments. And that can eat up a lot of your income in those first years after graduation when you'd rather not be wasting that money. All right. RS, can you tell me how a HELOC works, a home equity line of credit? Sure. If you have equity in your home, let's just say your home's worth $500,000, and let's say you have a mortgage on it for $200,000. You can take out a home equity line of credit on some of that equity you have. Most lenders will go up to like 70 or 80%. I'll keep it simple. Let's just say you can take out $200,000. So like you already have a $200,000 mortgage. You could take a HELOC out for $200,000 so that you now have $400,000 in debt on that $500,000 house. And it operates like a credit card in terms of you can draw on it, you can pay back on it during the draw period. And at some point in time, they won't let you draw on it anymore, and it converts into a regular loan. You have interest on them. That's not free money. You're still going to pay. I think the HELOC rates today are 7-8%. And it's also your house. So if you don't pay it, they can foreclose on it. So, Sarah, it really depends on what you do. Yeah, other people are chiming in too. So thanks for sharing. It depends on the major. Some majors require a bachelor's degree to get a good job. It also just goes with your experience and your skill set. I think you don't have to do anything beyond an undergrad necessarily. If it's required, a lot of jobs will pay for it. If you're in a corporate world, a lot of companies will pay for advanced degrees to have you move up or do different things. But you don't need to. Studies applying data science. So here's the thing: you're a senior studying data science and info science. Just get done, get a job in that field, work in that field for 5 years, and then see what you feel like you need. And if you work for like a large company, there's a good chance they might even pay for an advanced degree if it is, like beneficial for you and them. Nick, civil engineer here. Can I get loans forgiven? Nick, it doesn't matter what you went to school for. There's a lot of forgiveness programs out there. The best, quote unquote, and most popular is public service loan forgiveness. And it doesn't matter what you do, it matters who you work for. So if you work for the federal government, state government, local government, nonprofit, things like that, yeah, 10 years of making payments and you can get your loans forgiven. There's also, other programs like time-based loan forgiveness. So if you're on IBR, income-based repayment, or if you join the upcoming repayment assistance plan and you make payments for 20 to 30 years, depending on the plan, any remaining balance on your loans forgiven. You can also get total and permanent disability if you become disabled. You can, it depends on your state. Like almost all the states have student loan repayment assistance plans. And I don't know, maybe you work for a corporate employer, Fortune 500. Almost all the Fortune 500 companies these days seem like they have rolled out student loan repayment assistance programs where they'll pay $5,000 a year to your degree for working there. So like there are a lot of options out there. And again, notice how none of them really had to do anything with your degree. It's all on what you're working at and what you're doing. Damn. So if you had a degree in dance but work for the government, you can get your loans forgiven. Absolutely. Again, it doesn't matter what you went to school for. It matters what you do and who you work for. And that's the story of college. It doesn't even matter. It's after you get your first job, no one cares what you went to school for. No one cares what your college degree is. Your second employer only cares about what you did at your first employer and what you're going to bring to their organization. So, like when we were talking to Sarah there, you have to have the skills. College is designed to help you build the skills when you're 18 to 22, but it doesn't solve the problem that you need to build skill sets that companies want or you want to make money. Like that's what this is all about. Library Dragonfly paid off 120K in between my hubs and I. Currently debt free, own my home and cars. You can do it too. I love that. You can do it too. It is a great reminder. It is absolutely doable across the board. I will not miss needing to know applied calculus for microeconomics. Damn Kai, I get it. Or damn not Kai. I always, it's tax season, so there's always that meme that it's like, man, I really wish they would have taught me taxes in high school and not trigonometry, because I really need to know my taxes more than I need to know trigonometry. Nicole. Okay, this is going to sound crazy. Nicole posted, I lost my job. I'm on save. What do I need now? Nicole, this is crazy, but you need to apply for IBR right now, like literally today. Because, Nicole, you have lost your job, so you have no income. So you can leverage that to get a $0 monthly student loan payment. And it might not be zero because maybe you have some other side hustle income or low, but it'll be very low or zero. But use this to your advantage to lock in an IBR payment using that. So when you go to studentaid.gov, you go to enroll in IBR. That's okay. You have nothing. Great. Enroll in IBR, choose alternative. Don't use your tax returns. And then you can either submit your unemployment form, your letter. You could put a signed letter that says, I currently have no income, I'm unemployed, and send that in. And that'll get you a $0 IBR payment for 12 months. It's Maritza, I am on IBR, started my first payment in January, and I'm currently on medical leave. Can I request a lower payment? Maritza, again, just like I was just telling Nicole, if you apply for IBR, you choose like, I want to recertify my income in the middle. Like there's like three options: new, recertify, recertify early. You're going to recertify early. And then you can say like, I'm currently on medical disability and I have no income, and you can definitely do that. Shanice, is there a way to get more financial aid? You can appeal your financial aid award. So every college has a financial aid appeal, and you can ask for more financial aid. Remember, this isn't like a negotiation or asking for, or like something like that. Like you're asking them for more aid because either your financial circumstances change, this is your top choice college, and like you have a real reason why you want to go here. Like you need to give them something. You want to ask for more merit, like you improved your GPA as a result of whatever, XYZ. We have a guide on the College Investor of how to appeal for more financial aid if you want to see the process there. Well, there you go, Maritza. So that's what you say. So you just go in there and you say that, and you can recalculate it. DMAC, you can always apply for financial or appeal for financial aid every single year. You should be applying, you should be filling out the FAFSA every single year. And then if your circumstances have changed or you need something, you can absolutely appeal. There's no like only for freshmen. Damn Kai, no, FAFSA does not care about your other debts like medical bills. You can appeal those with the financial aid office, but also they may or may not do anything. Again, these colleges are under no obligation to give you more aid. They are businesses. Their job is to fill the seats with as many paying students as they want, not necessarily to help you not pay. So you have to remember that. Do I think the future RAP plan is good for med school grads? I actually do think it's good for med school grads because number one, it might be your only option versus the standard. If you borrow a student loan after July 1st, it is what it is. But I also think it's a good option simply because of the no negative amortization. So it gives you flexibility. You know, so many medical school grads get public service loan forgiveness, and RAP is the plan you need to be on to get public service loan forgiveness. But also, if you end up choosing something that is not public service, like let's just say you go into residency and you decide to go to for-profit work, your balance hasn't grown, right? Because you had no negative amortization. So I think that's a big positive for medical school grads. All right, guys, we have been going here for over 2 hours now on this Lunch and Learn. Now is the lightning round, guys. We're going to wrap this thing up pretty soon. So if you haven't asked your question yet and you want to, now is the time to ask your question. Glamour girl, should I wait until interest rates go down before I apply for a HELOC? What are you applying for a HELOC for? I'm not really a fan of HELOCs, so I really like to know more about why you want a HELOC. Sweet and sincere, do you think they're going to extend their tile for them to determine their post class? Okay, so you're talking about Sweet versus Cardona, and this is the borrower defense lawsuit. And I'm guessing you meant time. I'm totally inferring here, Sweet and sincere. So if I am misreading what you meant to say, okay, let me know. No, I actually think that I think they missed their deadline, and I don't know if the judge is going to show any grace to them missing their deadline because of how much they've kind of screwed up their court cases, like with a million other things. So I don't know. A lot of borrowers might get very lucky, but we also don't know. We just don't know at this point in time. If I learned anything in life, there's always one problem, obstacle after another. Yep. My daughter got a full ride scholarship to Fordham, but then got accepted to USC and Georgetown. Thoughts? My thoughts are they're all great schools. Whichever one is going to be the cheapest net cost to you at the very end. HELOC would be to do repairs on an investment property. Glamour Girl, are the repairs like badly needed, or is there value in this, or are you trying to improve it? I mean, I don't think you're going to see much lower rates anyway. So like if we're fighting over like 0.5% or 1%, like it's not going to change. My actual bigger thing is what's the math on doing it? I have two of my best friends both run accounting firms, and we always joke that 90% of all mom and pop landlords lose money on their rental properties. It's really bad. Most people don't make money on it. It's a break even, really messy situation. Like individual mom and pop landlords and things like this, just be careful. I don't think so. If you want just the rates, the rates are what the rates are, and that shouldn't be the defining factor of whether you do this. Oh, that's so funny. Damn Not Kai like called out a big secret here. I noticed some of my professors at USC were also teaching at the Cal States. So this is one of my favorites because a lot of the best professors also teach at community college because they love it. And so it's like you could get the best professors in the country at your local community college just because they do it as a side gig, and they're probably, you get it for free or for like a $200 class. So I think a lot of people do too. I think a lot of people also get a lot more practical, useful stuff at community college, and it's certainly a lot cheaper. A lot cheaper. Sam, not Sam, is it wise to take a small loan to help cover graduation fees and costs? Sam, not Sam, it is never wise to take a loan you don't need. I don't know what your graduation fees and costs are. Like, I wouldn't even walk if it meant going into debt. Like, I don't need to walk at my graduation to go into debt. I don't need to. I'm asking for a young lady that doesn't have the resources to pay for their fees. Um, if it's make or break and you don't get your diploma, like I guess, but like I wouldn't pay it to like walk on stage. Like I don't understand what the graduation fee is. Going back to school after 24 years for a career change. While I technically have the funds, I want to find scholarships. DMAC, they're out there. Just type in 10 best scholarship search sites and start searching. you know, yeah, Damn Not Kai's nailing it. There might be some fee waivers if they're low income, things like that. But DMAC anyway. So sorry. While we technically have the funds, I want to find scholarships. Yeah, you just got to search for them. They're out there. They exist. Private scholarships are typically not going to fund your college. Private scholarships usually come in $1,000, $2,000 chunks. They're not going to be like the make it or break it. I would also just be very mindful, DMAC, at 24 years later, that you're in your late 40s or 50s. If you want to, retire, like, I don't know, I want you to be mindful. All right. Uh, yeah, Sam, not Sam. I just did a quick search of it, and there's fee waivers for that. So I would encourage them to do the fee waiver. Um, Shri, do I think you should go to Virginia Tech or NC State, 60K or 20K? If you're borrowing and if you're paying cash, go wherever you want to go. If you're borrowing, 100% of the time it's NC State. There's no bachelor's degree in America that is worth $240,000 in student loan debt. So that's the easiest question that there is. It's not even a question. Nicole, is IDR the same as IBR? So IDR is like the category label, and IBR is one of the IDR plans. So IDR stands for income-driven repayment. IBR is income-based repayment. It is one of the income-driven repayment plans. The other income-driven repayment plans are ICR, pay-as-you-earn, the SAVE plan, and then the upcoming repayment assistance plan. They're all income-driven repayment plans based on your income. The other category is the standard plans, right? So the standard plans are the standard 10-year, the extended, and the graduated plan. So when we talk about student loans, we either talk about standard plans or IDR plans, and then each of those has the individual plans inside of the broad category. Am I vicariously, if I know I'll be working in public education forever, should I go for PSLF? Yes, if you're working for a public service employer, it's not really going for it. Like, you're already making your payments on your loans. You're just checking the box that you're getting your public service loan forgiveness credit for those payments. So absolutely, public service loan forgiveness is the best, quote unquote, loan forgiveness program. Over 1 million people have gotten their loans forgiven, and about 150,000 people are getting their loans forgiven every single year. So if your goal, MI vicariously, is to go for PSLF, your actual monthly goal then is to get on IBR right now and pay the lowest legal amount required by law, never pay extra, maximize your loan forgiveness. Okay. That also means doing things like throw more money into your 403B. How do you lower your income? Save for yourself in your own retirement so that you bring down your student loan payment. You get even more loan forgiveness. Lucy, can you just send a payment of whatever you can pay without them agreeing? Lucy, you can do that, but it's also no different than taking $20 bills and just throwing them into the fireplace. Like, it's really pointless. Yeah, it'll go to your loan account, but it might not be making any progress that is meaningful for your loans. And you still might be in default, and they might garnish your wages and do things for you. So, Lucy, you need to get on a student loan repayment plan. The best, lowest cost options for you are IBR. Just get on a repayment plan. Because if you're not making a full monthly payment by throwing whatever money you want at them, you'll still be in default, and they'll garnish your wages and your taxes. Okay. And it's also always more expensive than being in an income-driven repayment plan, because when you are on an income-driven repayment plan, you're at least making forward progress to loan forgiveness, things like that, where just making random payments doesn't help you with anything. So, I mean, it's kind of those things like you can do that. It's just really dumb to do that. Haley says, do you think there's a risk of PSLF disappearing? I think the risk is extremely minimal. I mean, of course, there's always a risk, but it would take an act of Congress. House has to pass it, Senate has to pass it, President has to sign it. It would only impact future student loan borrowers after the date that it was signed. But yeah, it could happen. It wouldn't be retroactive, and it wouldn't impact you because you already have student loans, but it could happen. I just don't think I think it's very minimal risk. Pillin says, buy a house and sell the one I have now. Currently have a 2.8 APR. Hate the neighborhood I live in. Pillin, it's a preference question and what you can afford, right? So buying versus renting is always a preference. Everyone needs shelter. You're always going to pay for that shelter. So I don't know what you're paying, what your monthly payment looks like, what your income looks like, where you want to live, what that looks like, but it's a preference. Mathematically, buying a house isn't like necessarily any better than renting. Buying a house here and selling a house isn't necessarily than buying another one. It's a personal preference question. I also just realized, what makes owning your own home such a bad investment, quote unquote, is the transaction costs, right? You have transaction costs to buy. When you sell, you pay those commissions, all the things. So like that really eats into any profit you might have even had. So keep that in mind. All right. Mimi, is it good to start paying on a student loan while in school? No, you never make payments on a student loan while you're in school. You don't do it, Mimi. And here's the math of why you don't do it is if you're an undergrad, you don't know what's going to happen to your student loans after graduation. 50% of every student loan borrower qualifies for some type of total or partial loan forgiveness. 50%, 1 and 2. And you're not going to know that until 6 months after you graduate. And so anything you pay while you're in school could potentially, you have a 50% chance that you are wasting that money. And that's too high of a chance for me financially. Because if your loan's forgiven, you don't want to pay extra on your student loan. You actually want to pay as little as legally required and get that loan forgiveness. And I'm not just talking about public service loan forgiveness or time-based loan forgiveness. There's 80 ways to get student loan forgiveness. There's teacher loan forgiveness. All the states have loan forgiveness programs. You could go work for an employer that offers student loan repayment assistance, which is like almost every Fortune 500 company these days. Like there are so many ways to get student loan forgiveness. Like you don't want to make those payments while you're in school. And if we're just talking about your federal student loans while you're in school, if you borrow federal loans for yourself, freshman, sophomore, junior, senior year, we're only talking about $1,500 in interest over all that time. $1,500. That's all we're talking about. It's not that much money that you're even saving by paying stuff while you're in school. So don't do it. I mean, I'm not the kind of guy that's going to take a 1 in 2 odds of wasting money. So, but now you know. I am. I'm just trying to buy at 5.7% because interest rates are high. Interest rates are high. I bought my first home and it was 6.75%, and my second house was 6.25%. They are high, but they're actually lower than the historical average of mortgage rates. So again, it goes back to this preference question for you. If you hate the neighborhood you're in, you don't feel safe, you could sell your house and you could go rent. You could put the proceeds in an investment account and watch that grow. You might be better off financially. You have to guess, how does student loan forgiveness work on Parent Plus loans? So Parent Plus loans don't have as many options for student loan forgiveness. Existing Parent Plus loan borrowers can access income-driven repayment and public service loan forgiveness only if they consolidate, enroll in these plans, and do so by June 30th and never borrow a federal student loan again. You can have access to public service loan forgiveness, income-driven repayment. However, after July 1st, you will no longer have access to income-driven repayment plans and public service loan forgiveness. You will continue to have access to like the normal programs like death and disability discharge, things like that. Haley, thoughts on doing IBR but paying extra amounts to pay it off sooner, but have the ability to pay less is needed? I'm not a fan of it, Haley. It's you got to pick your battle there. If you're going on the IDR plan, your goal is to minimize your loan payment. If you're trying to pay off your loans, do the standard plan. Like if you do encounter some unexpected financial hardship in your life, you just change repayment plans. But I don't like it that like you are trying to like hedge your bet one way or another, because I also know from 20 years of doing this, the behavioral finance person in me says that if the sticker price doesn't come out that way, most people aren't paying over the sticker price. They're just paying what they have to pay. So Belinda, some rental properties are more expensive than actually owning. They are. But do you also know that many of them aren't? It really depends. And this is where everyone needs shelter. Everyone has to live somewhere, and everyone has preferences on what they want. There's definitely pros and cons to owning, Belinda. When you own your own homes, you can customize it. No one's going to raise your rent on you. No one's going to try to evict you, say they're going to move in or remodel. Like, there are definitely pros to ownership. However, there are just as many cons, right? Like your property taxes, your repairs, it might not be where you want to live. Like you might have moved jobs, so like your commute's farther, yada, yada, and there's big transaction costs. When you go into renting, especially if you rent in a corporate ownership type place, some of that stuff is fixed. And so you don't have to worry about repairs and maintenance, and you don't have to, they could raise your rent on you, yes. Less likely that you're going to get evicted in a corporate ownership structure. But yeah, there's pros and cons, but we all have to live somewhere, and we all need shelter, and we all have our own preferences about what that looks like in our individual lives, from commuting, customization, size, space, whatnot, maintenance. So Haley, what percent of income do you recommend goes towards your student loans? Are we trying to pay them off, or are we on trying to maximize forgiveness? Because if you're maximizing forgiveness on IBR, it's 10 to 15% because that's what the IBR plan's set at. If you're trying to pay them off, you just debt snowball every single extra dollar you have after you invest in your 401k and your IRA and things like that. There's no set percentages. My goal is to save until it hurts. So like you should be feeling the pinch financially every single month while you're getting yourself into a better financial place. All right, guys, we have been going for almost 2 hours and 45 minutes. This will be the actual lightning round here. So, like, if you got a question, now is the time to drop your question in the chat, because we are going to wrap this up here in a second. Um, Haley, is the pros and cons of filing jointly versus separately for IBR plans? It's a big tax question. It's not as much of a student loan question. So you need to run your taxes. Filing separately always raises your tax bill. You always pay more in taxes filing separately. So the question is do you save enough money on your IBR plan that offsets the higher taxes? I gave the example earlier of your taxes go up $2,400 a year. It's $200 a month. So do you actually lower your student loan payment by $200 a month as a result of that? If you do, well, then it's worth it. But if you don't, say your student loan payment only goes down by $100 a month, well, then it's not worth it. It's not worth it to pay $200 more in taxes to lower your payment by $100 a month, right? So you have to do the tax math more so than you have to do the student loan math. All right. Definitely. Glad to help, Haley. I'm glad that you're getting these questions answered while you're in school because, yeah, I don't think a lot of people are sharing all this content with you. All right, guys, we have done it. Thank you guys so much for being here. If you haven't liked, subscribed, and followed, please like, subscribe, and follow. And we'll be back next week with another Lunch and Learn to answer all of your questions.